Good morning, everybody. How's everybody doing today? Hopefully you're doing great. I'm still setting up, but I'm going to talk while I set up. Hey, Chris L., nice to see you. Good morning, Cav. Edwin, nice to see you too. Guys, I'm excited about today, mostly because I absolutely plowed through my goal this morning. But I had some really cool lessons from my brother today. Hey, good morning, JW76ZX and Miss Debbie. Nice to see you. And I did exactly what most people do. And I want you guys to, and I guess I want to share this to start it. Maybe I should wait until 9 a.m. You guys know that I'm not shy about talking about my own journey and the things that I've done and the things that I mess up and the things that I do well and all the things that happen in my life. But one of the things that we talk about when you're learning software, guys, one of the things that we talk about when you're brand new, when you're becoming comfortable with a methodology, I've told the story of when I would train managers for this company that I worked at, and they would do amazing, and they would do so great because they would follow these checklists and they would follow these plans and they would stay focused on really adhering to the path that was put before them. And then right around 30 days, typically people have what we call the 30-day stupid. And I had mine over the last 2 days, guys. I was learning this new methodology from my brother, the same class that he's teaching. I was his first student a week before his first class, just so that he could go through it, refine it. And I spent a lot of time on simulator, and I decided that I was great, and I went live. And I was crushing it, just doubling what I'd been doing. And about 2 days ago, I decided to form opinions. I decided to deviate from the plan, to break away from what was bringing me success. And I started forming opinions. And I had 2 pretty big losing days, which hadn't happened in a while. So this morning, I went back to my brother. And I was up at about 4:45 this morning, Central. And when he woke up, we got on Skype, and I told him, I said, hey, John, these are my trades from yesterday that I struggled with. These are my results. I'm not proud of them. What direction do I need to go to fix it? And he said, hey, look at this. Look at this right here. Look at this right here. This is what you're doing. This is what you need to be doing. Let's get you back in line with the proper thinking. And it was cool. And it took that 5 minutes. It took that couple pictures and a little conversation. And I was right back on track. I was right where I was a week ago. All that being said, because guys, my journey is no different than your journey. And when you're learning something new, one of the most valuable pieces that you can have as a coach is somebody to look at your work, somebody to look at your trades, to look at your charts, and to do it without the fear of loss or the fear of financial ruin or without the nervousness of wondering if it's right. But when that chart is sitting there, getting that little bit of feedback, getting you refocused, guys, that's what this classroom is designed for. And I guess it just excited me today because it just validated that the process is a good one, that the coaching is important, no matter what level you're at. And sharing your pictures is the easiest way to get that. And when you hide failures, you miss out on the opportunity to grow. Hey, good morning, Haji. Good to see you. So that was my little soapbox. I had a huge epiphany this morning. Just ridiculous. I went and woke my wife up practically. Hey, guess what? This is what I did this morning. Been an outstanding morning. So I'm excited to share another outstanding morning with you guys. And let's do exactly what I did. And let's just move forward and have some fun. But before we do anything, let's check news, right? Nothing worse than being in the perfect trade and getting bumped out because some Yahoo decided to make an emotional decision based on a news release. Today is Tuesday, December 5th, guys, and at 9:40 a.m., we have some light impact. Man, Cav, I'll tell you what. You want to know what it is? There's even nothing to see. Don't fight the large chart. Don't fight the large chart. That's what it was. That's what I was doing. is I had formed an opinion, and I didn't wait for things to settle down. I didn't wait for things to slow, to roll, to do all the things that it needs to do, to give myself the highest chance of success. And it was just amazing because I was getting in early. And because I was getting in early, I wasn't getting the best information. And it's kind of cool because that happens to everybody. It's one of those things where it just kind of it works its way in. So you don't even have to see it. I fought the large chart. I fought the large chart direction. I fought the large chart triggers, and I got exactly what you would expect to get out of it. So there you go. Um, and we have these little sayings every now and then, and I think ours for today is, oh, I don't even know. I think it was something like it was better to wait for confirmation than trade the opinion or something like that. And that's exactly what I wasn't doing, is I wasn't waiting for the confirmation. An area could hold or break. I wasn't waiting for it to hold or break. The area might be a good bottom. I wasn't waiting for it to be a good bottom. I was trying to be first, and being first rarely works. And one of the wonderful things is what we're about to talk about today, guys, is you don't have to be first. You can let someone else be first. Let someone else give you all the advantages, and then we'll work our way in. So that's what we're going to talk about. Good morning, Jose. Um, so I hope that was an okay answer, Cav. Don't fight the large chart. that was essentially it. Yeah, forgiveness and permission. I don't know. I think trading's the exact opposite, Edwin. I think permission is given when all charts agree, right? Forgiveness comes from telling your wife that you just blew out an account and you're hoping that she's good with it. Yeah. So guys, at 9:45 today, or I'm sorry, at 10 a.m. today, we've got high impact news, red news. I would say that you should write it down on a piece of paper, that you should set a timer, do as you say and as you do. Amen. Because this red impact news, guys, there may be somebody waiting in the wings. If it's positive, they may dump a bunch of money one direction. If it's negative, they may dump a bunch of money the other direction. We don't know what they're going to do, but we do know that the likelihood for a reaction at 10 a.m. is really strong. And a lot of these prop firms won't let you trade into news. They'll actually disqualify you if you trade into news. And it's because there's an emotional response, because somebody's making a decision based on news. We don't have that burden, guys. We don't have to wait for news to make our decisions. We wait for advantages. But knowing when someone else is going to do it, crude oil was going way down and then it went way up, Jose. I don't know. Is it going crazy? It's bouncing off of fibs. But this was kind of a lesson too. You guys want to see? And Cav, here's the picture for you. You want to see the mistake I was making? It has been, Jose. Guess who's, and I can pick on myself because I'm pretty good with self-esteem, but guess whose dumbass went long on that one little green strip? Not coming from a termination, nothing. This was my problem, Cav. Yeah, I went long. Got run over. Formed an opinion. Had an incomplete usage of my rules and tried to go long. And it just didn't work out for me. And then when everything said long, that's where I got in. And then that's where I got out. And then that's where I got back in. And I want to say I got out somewhere, I don't know, somewhere. I don't even remember where. But it was up there a ways. It was a hell of a good trade. So it undid my stupid, thank goodness. But the idea is that you have to recognize that. You guys, you have to recognize if you're making mistakes and then grow from it. And I don't always see it. I couldn't figure out what I was doing wrong. I thought I was doing everything right. And in the moment when you're making an opinion, you believe it wholeheartedly because you trust you. And that's where that second set of eyes really paid huge dividends for me. So guys, I hope that you'll embrace that you'll use those second set of eyes as well. Right now, I'm just telling you at 10 a.m., things are likely to go wild. Sit on your hands. And then we're going to spend our first hour, guys. We're going to talk about a high probability trend trade. And this is the one, guys. This is your foundation. So Haji, this is you, brother. For 20 days, let's figure out when it's right to get into the market, guys. And the best time to get into the market is when the advantages are present, when you have momentum, when you have a clear path, when you have an entry area. And we're going to break each one of these advantages down. We're going to look at it visually. We're going to talk about what it means to you as a trader. And I want you to go ahead right now from the get-go. I want you to start talking to yourself when you read your charts in terms of advantages. What are my advantages? Are they present? Is it time to take a trade? And it's time to take a trade when you have momentum, a clear path, an entry area. That's your recipe. Whoops, they just bumped me. I'll be right back, guys. Don't panic. Nobody panic. We are going to be good. No, it's scary. I disappeared. Guys, talk to each other. Talk you through it. Almost there, guys. Sorry about that. All right, we should have a screen and we should have voice. Is everybody good now? Sorry about that. Sometimes Discord likes to let me know that I'm not in charge, just like the market. Can you guys hear me? 5 by 5. Thanks, Edwin. Swear to St. Edwin. I'm going to go Ed. Cool. So, guys, 3 rules. Each rule provides an advantage. It's the accumulation of the 3 advantages that create a trade. And these 3 rules happen on only 2 charts. Guys, I'm going to give you this picture right now. If you're relatively new, I want you to save it. I want you to put it in your spreadsheet. I want you to write it down on a piece of paper. But large chart leads the way. That big chart leads the way, guys. And this was the mistake that I faced over the last day or two. Is if the large chart doesn't say it's time to get work done, it's not time to get work done, guys. Your large chart's going to define direction. It's a big, broad stroke of a brush. You're going to use one bar, the most current bar on the large chart, and it's going to define direction. It's going to let you know which way you should be trading. It's going to define momentum. It's going to let you know if the market is pushing like a herd of angry cattle into the distance. And it's also going to define areas, guys. And areas are such a key part of what we do. These Fibonacci areas are unbelievable. And they will help you predict tops and bottoms. They will help you recognize where the market is likely to go, where the market is likely to stop. And all of this happens on a large chart, guys. And if you just embrace the idea that the large chart leads the way, it removes a lot of problems. Your first 2 rules out of 3 happen on the large chart. And when they're met, you've already got momentum and a clear path. You've got nothing between you and your target. You've got the strongest push in the direction that you could ever hope for. And then you're just going to refine it. Once those rules are met, you're going to go to a smaller, faster chart. And this smaller, faster chart is going to refine the broad stroke of a brush, guys. This is an entry chart. And I wrote that on there for a reason. This is an entry chart. Don't focus on the small chart. Let the large chart lead the way. But what this does is it takes that one bar that says direction, momentum, and areas, and it refines it to about 15 to 30 bars, depending on the movement. You will pinpoint where the market is likely to continue. You will be able to enter at that area. Rule 3 is designed to get you in. And what happens is these 2 charts are where you're going to find these 3 rules, and it all comes together to produce what we call a high probability trend trade. So straight from the education page, if I go to the tutorial section, I'm going to go ahead and go to the glossary of common terms. And this is a good read anyway, if you just want to know what we're talking about, I guess. Some of the lingo. But what we talk about in this first hour, every day, guys, I'm a broken record. I know I'm a broken record. Is the high probability trade. Because the high probability trade means that each indicator on every chart agrees for the trade. This is when your triggers are the strongest, rule number 1. When there's no termination conditions, rule number 2. And there's no trouble spots between you and your entry. Guys, this is the feel-good trade of the year. This is the trade that typically wins 70 to 80% of the time. This is the trade, say it with me if you've been here, that builds confidence through the memory of success, because it does win more than it loses when you follow the rules. But what it does for you is it turns you into a chart reader, guys. This high probability trend trade maybe sets up 3 to 5 times a day in the typical day, maybe. You have to be very, very patient. But if you embrace it for a couple weeks, it turns you into a chart reader. And becoming a chart reader opens doors. It opens doors for different trades, different patterns that you begin to recognize. But becoming a chart reader is so important because 90% of your day is spent reading your indicators, waiting for advantages. If you are busy every second of the day, you're probably overtrading. 90% of it's just waiting for these momentum, this clear path, this entry area. 10% is taking advantage of those advantages when they present themselves. And we're building confidence right now through just study, recognition through repetition, guys. We're getting to where we can recognize these advantages at the drop of a hat, so we never hesitate to get into the trade. And your chart reading is going to give you 3 very key concepts. You're going to understand where the market is likely to continue. This becomes your entry point. Where that trend is most likely to continue is exactly what you're looking for to get into the market. Where the market is likely to go. Guys, this is using Fibonacci and momentum and giving yourself the opportunity to get the most out of each and every trade when you can read these indicators and what they're telling you. And then finally, where the market is likely to stop. Where the market is likely to stop is insanely important for 2 reasons. The first reason is if the trend is up and everything says up, but you reach one of these likely to stop areas, it may tell you no more long trades, because this is an area where decisions are being made. This is an area where the sellers may take over, where the buyers may take profits. This is an area that can create a bounce or a reversal. So these likely to stop areas are called termination conditions because they can terminate the trend. And then the second half of it is these likely to stop areas, when they do terminate the trend, when they do reverse the market, it sets you up for the highest probability trend trade that you can take. When these 3 rules are met after a termination condition that reverses the market, guys, that's the one that typically wins 70 to 80% of the time. And it takes a little bit of patience and a little bit of recognition, some study, maybe a couple questions. But if you spend your first 30 days focusing on entries for the highest probability trend trade, you will become a chart reader. And your chart reading is going to identify advantages. And then these 3 advantages are going to take you beyond that high probability trend trade. They're going to start setting you up for other trades, for momentum trades, for edge trades, for high volume area trades. But learn to crawl before you walk, before you run, guys. And so we're going to focus on this. And then, of course, I'm going to remind you, this is your step-by-step path to becoming a confident trader. ASAFP, guys. Post your trades in class. Can't stress this enough, guys. Tell me what you're doing. Even if you're not doing it well, or maybe especially if you're not doing it well. And that's okay to not do it well, right? We're all new. Tell me why you did what you did, guys. Post a picture of the room and tell me why you did what you did. There are no wrong answers. I can't stress that enough. I do not think less of anybody for taking a loser. In fact, I actually admire you a little bit for being willing to put it in the room and turn it into a growth process. There are no wrong answers, because what you see may be what produces another trade for you later down the road. But you have to tell me why you did what you did, because if your line of thinking is a little skewed, I want to help get you on the right path. Show me where you enter. Where you enter is hugely important because it can help you reduce risk. It can help you maximize profit potential. And if you are getting in early or getting in late or something like that, show me the picture. Tell me where. We'll work together to get you the best of the best entry. And then finally, tell me where you got out. If it was a predetermined target, let me know that. If you were holding for a bigger target, let me know that. And we'll look at the indicators and see if they support the decisions that you're making. But spend a lot of time taking pictures, guys. 15 a day is 75 a week is 300 a month. I've got about 12,000 pictures over the last few years. And I'm telling you, the more pictures you take, the more pictures you present, the quicker you're going to get to where you want to be. The second half is use that trade tracking sheet. It is I made this picture for you guys this morning. Your trade tracking sheet is in your Nexgen study picks folder, guys. This is brand new, unmolested, clean for you to start using. And this sheet, the first page is a journal. It's a trade journal. Every time you take a trade, put it in there. Every time you do something, every time the trigger gets pulled, you're going to drop a picture into your spreadsheet. You're going to talk about what you see. You're going to talk about how you felt. You're going to talk about whether you won, whether you lost, whether the rules were met. And then this notes section, when you get feedback in the room, when you present your picture and then you get feedback, drop it in the notes section. Because this is going to do two things, guys. You're going to recognize patterns that are bringing you success. That's the what worked. And then you're going to recognize patterns maybe in yourself or the market that are robbing you of that success. And that's what didn't work. So every morning, study what you did yesterday. Every morning, go back and recap. Look at it. And sometimes you're just not sure. And sometimes you don't know what went wrong. That's why posting is so important. What feels easy is typically rules-based trades. What feels forced is typically the ones where you're breaking, where you're forfeiting advantages. But this brief study every morning is going to set you up. It's going to prepare you for the day. Your mindset is going to change. That's what I did this morning. As I looked at what I did the last couple days, I got a little coaching from my coach, and it set me up for the day, and it really made my day a lot easier. And the same can work for you. We're going to take the first hour and learn the trigger line and Fibonacci rules for when it's okay to trade. We are going to study those three rules. We're going to look at the advantages, what they look like. We're going to talk about what it means to us. And guys, this is our first hour every hour. This is where I have to make this little statement. If you're brand new with me, or if you're unclear on any of the concepts for the high probability trend trade, I want you to raise your hand. I want you to interrupt me. You can't mess up my flow, guys. I've done this probably 800 or 900 times, and I'm just going to rattle. So I can't see your faces. If you need a little help, let me know that you need a little help. It will, it'll let me help you. Oh, my wife just sent me a text. She passed everything for her MBA. Yay, I think she has an MBA now. Simulate. Simulate, guys. Get out there. And Chris, it is stagnant because the buyers and sellers can't make decisions and nobody's willing to take the lead. Don't overthink it. I mean, it's silly, right? These guys can't make a decision. So in order for the buyers to push it up, the sellers have to yield a little bit. In order for the sellers to push it down, the buyers have to yield a little bit. And if neither of them are willing to give it up, well, then you see this right here. Isn't that awesome, though? From fib to fib to fib to fib to fib. And they might be waiting for news, but you guys don't have any rules met. So nobody's getting run over in Nexgen. They're just waiting. And this happens a lot before news, doesn't it? You'll see them jockey for position, maybe trying to figure it out. I don't think that's a fib. Nope. But look at that. Resistance, and they tried to push down. Resistance, they tried to push down. And now they're fighting. And there's a big fight that you guys aren't getting caught in the middle of because you're waiting for your three rules to be met. And I think I closed out my picture on accident. So we're going to talk about those rules so that you can see them. We are going to simulate. You're going to simulate. And I want you to break everything. I want you to make as many mistakes as you can possibly make. I want you taking every trade that you think that you see. I want you just, oh my God, burn it down, right? Because it's monopoly money, guys, and simulators are where we learn. In simulators, you have to be willing to make mistakes, write down what you did, post it in the room, and that's what's going to get you to that next level. We want you practicing the correct rules, guys. There's nothing worse than getting rich on simulator because you got lucky and deciding you have this like false sense of security and you get into the market And suddenly Simulator Millionaire doesn't translate. Um, that's what I did. I got real lucky for 30 days, guys. I went live and I blew out 5 grand of my own money almost instantly. And I had no idea why, because I never followed this path. So we want you focusing on the rules, focusing on the advantages. And then we're going to simplify today. We're going to talk about a high probability trend trade. We're going to love on that thing like it's our own. This is the one that creates confidence through the memory of success. This is the one that has every advantage. This is the one that really is your foundational trade that's going to teach you to be a chart reader. And then I'm also going to incorporate what's called a medium probability trade. I'm going to give you a plan for it. In a medium probability trade means that most of your indicators line up. However, a small issue exists. And when I say that, it means that you will either have the absence of momentum, of a clear path, or an entry area. Just one. And medium probability trades aren't trades that typically win 70-80% of the time, but they're great opportunities to make money. And a lot of your trades, probably most of your trades, will ultimately be medium probability trades eventually. But when you do that, when you take these medium probability trades, your chart reading is going to let you recognize problems and manage assertively. So we're going to talk about it. We're going to simplify, and you need to determine what looks you're going to commit to. This is where that spreadsheet comes in again. Because the first page of the spreadsheet, this one's mine, is your trade tracking. We talked about that. And then the second page is your favorite looks. What's it going to take to get you in the market? You are building a database right now, visually, of what your best look looks like, so that when it happens, you can go back and study it, and that way it makes it easier to catch it live. You've got to know what you're looking for in order to catch it. And then your third page is just where we've got an awful lot from the users, people using the software, going through, making good decisions, embracing advantages, perfect entries, awesome trades, and sometimes absolutely beautiful trades that didn't make it, that didn't work, because anything that wins 70-80% of the time has to lose 20 to 30. The third page has ideas on management to help you hold longer. It has patterns that repeat themselves in the market every day, a whole section dedicated to termination conditions. Guys, I've given you a cheat sheet and I've filled out the third tab. Your job is to fill up your section of it. That second tab belongs to you. The more pictures you put in here, the quicker you're going to get to where you want to be. But there's a copy of mine. I just dropped it in the room. Please steal it. Use it. Take advantage of it. Go through and look at all this great stuff. And then we're going to go ahead and get busy, guys. We're going to focus on these rules. We are going to look at the high probability trend trade. Only 3 rules, right? Avoid the temptation to make it more than it is. Avoid the temptation to say, I need strong triggers, but I need no termination conditions unless, right? Keep it simple. I need this indicator to be that color. There's nothing in here that talks about color, but you're going to want to do it. Let's keep it super simple. Large chart leads the way. Large chart must have strong triggers, guys. Period. End of story. Non-negotiable. In order to have strong triggers, you've got to go with the direction of the market. You're going to define the direction of the market through the background color. And this is a very serious question about trying to be funny. Is there anyone in here that's colorblind that I can show you a trick to help you identify, just so you know which direction it's going? If you are, let me know. But if the background is green, we're in an uptrend. We're only looking for rules to be met for high probability trend trades long, because that's where the advantage lies. If the background is red, we're in a downtrend. We're only looking for rules to be met for high probability trend trades short, because once again, that's where the advantages are, trading with the direction. And then the only way that you can have rule number 1, the only way that it can happen, is if everything is the same color. So if your background is green, your small triggers, these solid lines, and your large triggers, the dashed lines, well, they have to be green too. There's just no way around it. So a green background, green smalls, green large, this is how you're going to get those strong triggers. And it happens when your small triggers break above your large triggers. The space created between the two. It's like scissors that have just opened up, ready to cut, right? The space between the two, the gap between the small and the large, this is strong triggers. In a downtrend, small's below the large are wide, they're angled in the direction of the trend. That gap between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. And you're going to see this on charts all the time. OFM, odds favorable momentum. Guys, odds favorable momentum should always lead the way. Odds favorable momentum is going to cover some mistakes. Odds favorable momentum is giving it that push to go in the direction of the market. Odds favorable momentum will even break those key Fibonacci areas from time to time. So odds favorable momentum, smalls above the large, space between the two, or smalls below the large, space between the two. This is the most favorable look for buying Fibonacci support on a smaller, faster chart. Historically, you'll see it as tails or wicks. This black line coming off the butt of that bar, this is a retracement on a smaller, faster chart. This is a little pushback on a smaller, faster chart. You guys are going to pinpoint right where the bottom of that tail is most likely to form. This becomes your entry for the highest probability trend trade long. There's another one with that odds favorable momentum. And then to the short side, there's one of those pullbacks to Fibonacci resistance on a smaller, faster chart once again, and it pushes with all that momentum. Guys, you're going to get this from the most current bar. And if I look at the S&P, I don't have it. I have indecision. One is up, one is down. It is not odds favorable momentum. On crude oil, smalls below the large are wide. They're angled in the direction of the trend. Guys, this is a market that's likely to push in the direction of the trend. And I get this from this one bar. Isn't that awesome? So easy. And then on the NASDAQ, smalls above the large are wide. They're angled in the direction of the trend. This space lets me know that this is a market that's likely to continue in the direction of the trend. The same way it let me know it was likely to continue all the way to that key area. Isn't that amazing? Guys, that is odds favorable momentum. This is rule number one. And if something can be strong, then it can also be weak. And weak triggers mean that your small triggers have worked their way inside of the large triggers. Weak triggers mean that anything can happen, up or down. Weak triggers remove your advantage of momentum. And when you lose that momentum, you typically see reversals and you see big bounces and you see deeper pushes, guys. Anything can happen triggers kill trades. And when you go through and you look at it throughout the day, odds favorable, right to anything can happen. There's a reversal, creates odds favorable. There's your tail. Up to anything can happen. There's your reversal, odds favorable. There's a tail. And then you get into this indecision, guys. This is a transition period. This is where buyers and sellers are duking it out for supremacy. These are where buyers and sellers can't agree. Chris was like, how come they're bouncing, right? How come they're not moving? Because neither one of them want to give an inch, guys. And you'll notice that the large and the small don't agree. You'll notice that the triggers in the background don't agree. This is a transition stage. This is where opinions get formed. This is where predictions get made, guys. This is where the average trader, not you guys because you're following rules, but this is where the average trader blows out an account forming opinions. I think it's going up. It might go down. Hell, I don't know. But if you sit on your hands and do nothing when there's nothing to do, eventually somebody's going to win. Eventually, that market's going to produce odds favorable momentum, and everything's going to work out just fine for you. And then look at that. Odds favorable. There's one of your tails. Right up to the key area. Isn't that amazing? I love it. I get excited about this stuff, guys. I hope you do too. And that S&P, absolutely stuck like Chuck. That is your transition phase. No reason to get caught in that. And then crude oil, that momentum is still pushing. Thank you, markets, for giving such a great lesson. But these happen every day. All you have to do is learn how to recognize them in the moment. That comes through repetition, guys. That comes through a lot of pictures and an awful lot of questions. Is everybody cool on rule number one? Odds favorable momentum should lead the way, guys. Odds favorable momentum covers mistakes. Odds favorable momentum sets you up to look for rule number two. And rule number two says No termination conditions. There's got to be room to your target. And then the NASDAQ did an awesome job of it. From this blue line to this red line, guys, termination conditions. Look how the market bounces right off of it. This is what we're learning now. We're learning to recognize termination conditions. And it happens on a large chart. And we're respecting lines is essentially what it is, guys. We're looking for divergence highs and divergence lows. There's a magenta line that prints from a pivot, and it prints when there's a loss of momentum. That magenta line prints when the sellers rob the buyers of their momentum. So visually, we see this line in the sand that they created. Divergence low is a cyan line where the buyers robbed the sellers of their momentum. And again, visually, we see it as the cyan line. It is a line in the sand. Red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s. This is your roadmap, new users. These are the areas on the large chart that we're looking for because they can potentially be termination conditions. But there's a recipe to get it done. And that recipe is right here in the tops and bottoms, guys. I don't keep any secrets from you. And I'm going to show it to you right now. And I'm going to draw a little bit. This is crude oil a couple years ago. But the patterns are still true, guys. In order to have a termination condition, price must reach an area. Why? Because that's where decisions are made. And in order to spark the decision-making process, price has to reach it. When price reaches an area, it means that these dynamic Renko bars come down and hit the area. When an area is reached, all you have to do is ask yourself, where are my trigger lines? And if your trigger lines remain above support when price reaches the area, no more short trades into support. And if price pulls back and hits resistance and all the trigger lines are below, don't try to go long into that area of resistance. It may stop, it may reverse, it may create a bounce. But that's your very basic recipe, guys. If price reaches an area, ta-da, and the trigger lines remain below, you guys knew not to go long into that trade, even with odds favorable momentum. Does everybody see it? That is a live market kind of. Price reached Fibonacci resistance. None of the triggers got it. Guys, look at how powerful Fibonacci can be. Price reached the divergence low line right at support and none of the triggers. And look what it did. It started to push up. Guys, termination conditions can stop the market cold in its tracks. Termination conditions can create a bounce that's untradeable. But these areas are where decisions are made. And you're going to learn to respect those areas because it's going to keep you on the right side of things. It's going to keep you safe. So guys, give me a Y in the room if you're with me. Price reaches an area. If the triggers remain above support, below resistance, just sit on your hands and wait. Chriselle, I appreciate the yeses. So if this is a no, no trade, can't go, we need a clear path. When is the path clear? Guys, when your small triggers and your large triggers get below or above the area that was behaving as a termination condition. So in this case, price had reached support and you guys all sat on your hands. You said, let's wait and see if it breaks or if it reverses the market. When both the small and the large get to the other side of support, you can see that it behaves as resistance. The area is now broken because small and large got to the other side. And it really is that simple. That's how you get your clear path. Notice that once that path is clear, and I love how this worked, we had odds favorable momentum. We had a clear path because price hadn't yet reached Fibonacci support. And there's one of your tails, guys, right at resistance that used to be support. There's your entry for a high probability trend trade. And then there's one other one. I'm going to give you guys that medium probability scenario that we talked about. And this one relies on odds favorable momentum. But when the smalls break through an area, 50% of your trigger lines break through the area and 50% do not. The smalls break through, the large do not. Guess what we call this look? It's a 50-50. 50% are through, 50% are not. If you have odds favorable momentum, well then this line has the potential to break. This area has the potential to break, but it's not broken yet, which means if it's not broken, there's no way it can be a clear path, right? And if it's not a clear path, then you don't have a high probability trend trade. You have forfeited that second rule, which turns it into a medium probability trade. And this will be the first medium probability trade that you look for, that trade where an area has the potential to break. And I'm going to give you a recipe for the best way to take it. But let's go through it. Is it broken? That's what this one's called. If you reach the area, the triggers don't break, reach resistance, triggers remain below, no trade. You don't know what's going to happen. You don't know if it's going to break, bounce. You don't know if it's going to reverse. And since you don't know, and we don't have a crystal ball or a magic 8-ball, it's healthier for you to sit on your hands and do nothing. If both the small and the large get to the other side of resistance, you can see that it now behaves as support. Both triggers are through, the area is broken, the path is clear. We're looking for rules to be met for high probability trend trades. And sure enough, they were. Odds favorable, clear path. And guys, there's your tail. This is where you guys are getting into the market. And then we have one more scenario where it has the potential to break. This is your medium probability scenario. Smalls smash through the area with odds favorable momentum, but the large are lagging. 69.80 has the potential to break, but it's not broken yet, which means that you have to be a little more assertive in your management. Because look at down here. Smalls made it through, large didn't. Ultimately, the area doesn't break and it goes to the upside. So I will give you the recipe for taking that best shot at a 50-50 trade. And then just a couple for your spreadsheets, guys. Terminations at a high. I like to share these pictures because it reminds you of the recipe. Price reaches the area. If the triggers remain below, sit on your hands and don't do a thing. And then termination conditions at a low. No reason to print that. Let's just copy it. If price reaches one of those lines at a low and all the triggers remain above, sit on your hands and do nothing. There's no reason to go into it, guys. These are termination conditions, and it really can be that simple. If price reaches the area, in this case, Fibonacci support. Absolutely no trade short, guys, not until it breaks, right? Odds favorable momentum broke resistance. Odds favorable momentum broke the one-to-ones, but then we started losing momentum, and here we go on a deeper push. You're going to get to the point where you'll go through and you'll start looking at this on every market. Let's see if we can use that S&P as an example. How does rule number 2 keep you safe? Well, there's your 50-50 that failed, and it went right to support, and then right back to resistance, and then another 50-50 failed, right to resistance, right to support, right to resistance. Rule number 2 helps you identify a market that's consolidating. And guys, I don't care how long you've been trading, this in itself is worth the price of admission. To not get caught in these areas that aren't trending, to not get caught trading into areas that may stop the market, that may hold the market. And guys, look at how accurate fibs can be. And I have a feeling when news prints, they're going to smash one way or the other. I'm not going to form an opinion. I've got a very definite line. You guys do too now. I need to see it below 55.50 or above 64.95 to make me feel good about making a decision. You don't have to do that. You can do whatever you want. But the market has shown me that it has a very large reluctance to break these areas. So I'm going to let small and large get to the other side rather than form an opinion or hope. And then we're going to go through the user guide one more time. I keep closing things out. I'm not sure why. Because there's one picture that I want to share with you guys straight from the user manual. And I'm going to ask as I go to it, is everybody okay with termination conditions? You're going to need to study them. You're going to need to go back and just practice them and take pictures of them and drop those in the room and say, Mark, is this a termination condition? Or even more so, hey, Mark, was this a termination condition? The market went up. And then we'll go back to those lessons. No, remember, price has to reach the area, and then we do that calculation. Where are my trigger lines? This picture is your 90% picture, guys. This picture reminds you that you don't have to be in every move, that you don't always have to be active to make money. You don't have to guess, you don't have to hope, and you definitely don't have to be first, because look at price screaming down with odds favorable momentum right until it hits a brick wall, those one-to-ones. And then what's that question we're asking ourselves? Price reached the area. Where are my trigger lines? Well, they're above the area. You guys knew not to go short. Congratulations, each and every one of you avoided a loser, except that one guy that went short right about here and can't figure out why he just got his butt kicked. Well, it's because he broke rule number 2. I want you to see the reaction, guys, and this is not uncommon. Straight from this area, the market pushes up, and then down, and then up, and then down, and then up, and then down. Holy fight, Batman. Triggers never get above resistance. They never even come close to getting below support. Guys, this is just like the S&P. You're looking at those rules. Ed, fear of missing out's killing you today? Are you trading opinions? Just don't want to miss it, right? Gosh, what if they go without you? Ed, you know what I do when I have fear of missing out? Because I have it just like everybody else. I want you to see something. That's 3 days worth of the S&P. Doesn't it stand to reason that there's some pretty good trades in there? Doesn't it stand to reason that if you just wait for it to set up instead of trying to force it, you're going to find something. You're going to get a trade, and the trade's going to be amazing, and it's going to be low risk, and it's going to be high profit, and it's going to be all those things that you need it to be. Guys, you have to believe that the market's coming for you. Because until you believe that the market's coming for you, you're going to form opinions. And that's what I did. That's what I was sharing with you guys. Is I was so worried that I would miss my long that I would try it 8 times and lose every one of them, just like you would have here. And by the time I'm exhausted from the 90% when I should just be chart reading, my head wasn't in the game for the 10%. When I had odds favorable momentum, when the path finally cleared, and when I got that amazing pullback to the best of the best. And this is the trade that typically wins 70-80% of the time. This is the trade that carries me to my next winner. Guys, what you do when there's nothing to do is probably going to define how your day goes. What you do when there's absolutely nothing to do is really going to make it work out for you. And this is what I posted to my brother this morning at 7:31 a.m. And this was my epiphany about me, Dwight. And maybe this will pay dividends. Ed, maybe this will help you out. You have to believe it will all come together. And you have to believe that it'll all come together. And that belief has to be stronger than your wish that an iffy trade will work. For me, it made sense. You have to believe when there's not a damn thing to do that eventually there will be. And once you trust that, once you get to the point to where you trust that if you just sit on your hands and do nothing, eventually there will be an opportunity. It's easier to sit on your hands. And you'll have days, right? But nothing to do here. Nothing at all. And sometimes it's okay to walk a lap, right? This is crude oil. Termination condition. There was nothing to do. No shorts. NASDAQ. It's just bouncing everywhere. And there's just nothing to do, guys. And sometimes there's not. And 90% of it is waiting for those advantages. So respect them. I'm telling you, rule number 2 is the most broken rule. It is the absolutely positively most broken rule because it forces you to be patient, to wait for the best of the best. It forces you to wait for that clear path. And a clear path, man, couple it with momentum, it's virtually unstoppable. So guys, that's rule number 2, large chart, respecting lines. Is everybody cool with that? If price reaches an area and your triggers don't break, just sit on your hands, relax. And then there's one more termination condition that I want to share with you guys. Sometimes the market turns from nowhere, right? This broad stroke of a brush, it doesn't show change as fast as a small chart will. So the only termination condition that I will ever respect on a small chart is going to help me identify when a clear path isn't getting me to the next area, or even when odds favorable and a clear path might be turning. In this final termination condition, you will see it on your smaller, faster chart. It's 3 divergences in the same price range. Remember we said that divergence from a low, the cyan line, means that the buyers stole momentum from the sellers. And that magenta line up top means that the sellers stole momentum from the buyers. 3 divergences in the same price range may terminate a trend, guys. You'll see it on the smaller, faster chart. This becomes a giant red flag. Don't try that next short. Don't try that next long. 3 divergences also becomes an awesome management tool. If you're in a short trade and 3 divergences print, it lets you get out of that trade before the bad things happen. But you'll see this from a low or from a high. If the small triggers get inside of the large triggers and 3 divergences print, weak triggers, 3 divergences, it's a little more powerful. If that final pivot is higher than the previous or lower than the previous from a high, it's a head and shoulders, a little more powerful. But you're going to see this look at a low and this look at a high when your large chart can't show you that change happening. This is going to help you identify when a problem may be in the works, guys. And these are your termination conditions. And this is rule number 2. It's saving your bacon right here, isn't it? If you're an S&P trader, there was never any reason for you to take a trade. But now we have momentum. And now we have a clear path. And guys, I'm 2/3 of the way to being able to pull the trigger. 2/3 of the way. The large chart has done its job. The large crowd is what the large chart reflects. They have provided us direction, and we know that we should be looking long. We know that we should be looking to go up. They've provided you momentum with strong triggers. You know that that market is likely to continue in the direction of the trend. And if you don't know now, you will with just a little bit of study. And then finally, there were no areas for the large crowd to react to. None of those key decision-making points. Fibs, yellow 1-to-1s, divergence highs and lows, which means that the large chart wants this market to go up. The large crowd wants this market to go up. Well, we're going to turn our attention to the small chart. And there's this group of yahoos that want to fight momentum, that want to fight trend. I happened to be one yesterday. It didn't work out for me. And they give us this little push. And we rely on this small push to get us back to the best of the best area, to get us to our entry where the market is most likely to continue. And guys, we do it with rule number 3 on the smaller, faster chart, on that refinement chart. That chart that turns 1 bar into 15 to 30. Here's a great picture of the refinement process. If I circle the 1 bar with odds favorable with that clear path, see the tail? That's your tail on a smaller, faster chart. And it goes right back to an area inside of favorable large triggers. And that's rule number 3. You're going to be able to pinpoint that spot with such accuracy that you are literally going to wait with a limit order. You're going to wait for the market to come to you. And you're going to wait at an area. The areas where trend trades originate, guys, are fibs, midbands, and yellow 1-to-1s. And that's what we use the lines on the small chart for, as a bounce point. And we want them to be inside of favorable large triggers. So when I say inside of favorable large triggers, what I'm talking about, where'd my picture go? Here we go. On your smaller, faster chart, you want both the large triggers, the same ones that help you understand momentum, and your synthetic triggers, which look exactly like the large triggers, but maybe they're stepped. I got like little angles on them. They're just the large triggers from your large chart. But when these two work together, when they're both wide in the direction of the trend, when they're both angled up in an uptrend, angled down in a downtrend, and when they're overlapped one on top of the other, guys, this favorable large trigger is defining where to find your areas. These favorable large triggers are going to reduce risk, create the smallest window of opportunity. And guys, trigger lines are moving averages. So when the average moves away, it tries to correct. When it corrects to areas inside of favorable large triggers, this becomes your bounce point. This becomes your highest probability entry. This becomes where you get in at the market where it's likely to continue for your high probability trend trade. The further apart those triggers are, the more risk you're going to have on a trade. So we're going to embrace the idea of favorable large triggers. We're going to do it on a smaller, faster chart, and you will be able to pinpoint right where the market is likely to continue. Guys, excuse me just 1 second. I need to walk out of the room for just a moment. I'll be back in about 30 seconds. All right. Sorry about that, guys. I heard my wife trying to leave the house, and I wanted to go grab her before she split because she's freaking brilliant. All right, guys. Rule number 1 is met on the large chart. You have odds favorable momentum. Rule number 2, Ron, is met on the large chart. You have a clear path. So you turn your attention to the smaller, faster chart, and all you have to do is wait for those yahoos, right? You're looking at your triggers, you're large, you're synthetic, they're up, they're wide, they're angled in the direction of the trend. You're looking at the areas that may fall within them, fibs, mid-bands, yellow 1-to-1s, and you're saying to yourself, and guys, you will say this to yourself, I just need that reversal bar. I just need that little pushback from the yahoos. And that red bar says that the yahoos have come to work, guys. And there's the beginning of that retracement, that small little push counter to the underlying trend. At the time of this reversal bar, you're going to create a window of opportunity. And guys, this is our focus for the next couple weeks if you're brand new, is identifying where the market is most likely to continue. From your highest point of support inside of favorable large triggers, I want you to get very accustomed to saying and writing on your charts the area of support inside of favorable large triggers closest to price, all the way to the area of support inside of favorable large triggers furthest from price. This is where the market is most likely to continue, guys. This is your window of opportunity. This is where you're going to activate a limit order at the top of that window. And why are we at the top of the window? Because your large chart has odds favorable momentum, because your large chart has nothing in the way. Guys, we're not going to trip over a couple pennies hoping to make some bucks, right? We're going to get in at the top. We don't expect the small crowd to do that much work. And if they push you back all the way to your limit order at that highest point of support inside of favorable large triggers, guys, you're in a long position. You are in a high probability trend trade. This entry becomes your focus for the first 20 days because great entries create manageable trades, guys. And it begins with the large chart having odds favorable momentum. We'll do little large chart annotations since we don't actually have one. It begins with your large chart having no termination conditions, right? Nothing in the way. We'll just call it no terms. Those are your first 2 rules. When those are met, you're going to wait for a reversal bar on your smaller, faster chart, something to signal the beginning of a pullback. When you get your reversal bar, we're going through the whole process here. Do you see that? From the highest line of your triggers to the lowest line of your large triggers, guys. large or synthetic, from the top line to the bottom line. This is not your window of opportunity. This is where you're looking for areas from your highest point of support to your lowest point of support inside of favorable large triggers. Guys, this is where the market is most likely to continue. This is where we're entering the market with the advantage of momentum, a clear path, and a point of entry. Give me a Y in the room if you're with me. Please let me know that you're like, heck yeah, I can do this. You'll be able to do it relatively quick. You're going to learn to trust it over the next couple months. So let's talk about some of the things that happen when you take a high probability trend trade. The market starts to come back and you notice that your small triggers turn against you and you say to yourself, egads and little fishes, my small triggers are no longer ideal. And then you remind yourself that the large chart defines momentum, and without that little pushback, that little turn, it may not get to the best of the best spot. And as that market pushes down and it reaches your entry order, you're reminding yourself that the large chart told you this is where you need to be. This is your best of the best entry. This is the highest point of support inside of favorable large triggers where the market is likely to continue. And if it pushes beyond that highest point, you remind yourself that you created a window. Guys, we're good. We are so freaking good at what we do, but we're still creating a window, an area where the market is likely to continue. And if it goes to the bottom of the window, that's okay. You're still in the window. But because we can identify where the market is most likely to continue, you are also very capable of understanding where the market shouldn't go. 4 or 5 ticks beyond the bottom of that window, guys. And if for some reason the market is wrong that day and it extends beyond your window of opportunity, it's going to hit a stop. And when it hits the stop, what does that mean for you? It means you just took a loser. It means that it didn't work. Guys, it is a cost of doing business, because I know that you guys are smart, and 70 to 80% winners, mathematically, I'm obligated to be okay with 20 to 30% losers. I have to be. I have to be okay with that, guys. I'm not going to sell you some BS snake oil and tell you that you're going to win 100%. You're not. But with the methodology, you can win more than you lose, and it's difficult to not make money like that. Your entry is your goal for the first 20 days, guys. And you're never going to miss this trade. You're going to develop trust. And you don't want to miss this trade, because this is the trade that 70 to 80% of the time does this. Profit target reached. It goes with momentum. It goes with the trend. It goes with the direction. And then, guys, Ron just said it, news. Let's see if it broke the S&P out of its range. Oh, my goodness. It most certainly did. Pretty cool. That's all they were waiting for, Chris L. But, guys, I want you to give it 20 days, right? Focus on your best of the best entries. Give it 20 days. Get in at the area inside of favorable large triggers. And I'm going to teach you how to develop trust. Go back. Scroll back. Look for odds favorable momentum. Scroll back. Look for a clear path and circle that tail on the large chart. If it lines up with support inside of favorable large triggers, guess what? That's a high probability trend trade. Take a picture. Drop it in the room. Write the rules on it and say, Mark, am I reading this correctly? To which I will lovingly reply, absolutely. And then sometimes it's going to be a medium probability trade. When a termination creates a full reversal, gives you odds favorable, the small smash through. Look at this pullback directly to support inside of favorable large triggers. That's not a bad winner. Isn't that amazing? Guys, there's your pattern that we just talked about. And look how it came from the bottom of the window. The reversal bar prints. You have one midband inside of favorable large triggers. And that was your bounce point. And off it went. Guys, this is your high probability trend trade. This is a trade that typically wins more than it loses. This is a trade that sets you up for success. And look at those ugly weak triggers. This is your focus for 20 days. I'm going to make it easy on you guys. We're going to start with a high probability trend trade checklist. Never had anybody in the history of the checklist do worse than 70%. Most people are up around 85, 90, but I like to be a little more laid back. And it's just reminding you of what you're looking for. And guys, these are also great things to write on your chart so that visually you associate the look with the rule. Good tops and bottoms, right? That's a termination that creates a full reversal. If you don't have it, you may have to use those 3 divergences to manage your trade. Odds favorable on the large chart. It even says on the small chart. No termination conditions, area inside. Guys, follow this. Use it as your Bible for the first 20 days. Just focus on entries, nothing else. If you're a visual kind of person like I am, here's the exact same checklist. Come on, checklist. But this one has the pictures. What is a good top or bottom? How do I identify odds favorable momentum? And how do I know when it's gone away? What's the recipe for a termination condition? And show me how to get that window of opportunity. Guys, all of this is right there for you as well. You should study this each morning before you start. Remind yourself what the looks are. And then, look at that. Smalls are through, large are not, has the potential to break. Right back to support. Weird how that happens. Guys, the key is going to be to have a plan. The key is to know exactly what you're looking for each and every time you pull the trigger, guys. And I'm going to give you a plan. And it's got the best name ever. It's the KISS plan, right? It's the Keep It Simple Sunshine Plan. And this plan is a stepping stone in your journey, guys. As you become a chart reader, this is the one that keeps you focused to optimize your chances of success using that high probability trend trade and that 50-50 trade, that trade that typically shows up when areas have the potential to break. Stepping stone, right? I had someone get mad at me. They're like, but you said this is all I can take. This isn't all you can take. This is optimizing your chances of success because confidence comes through the memory of success. This is giving you the best of the best on that high probability as well as that medium probability 50-50. But it's going to be through your simulation, through your study. Notice this one's underlined, through your class feedback. In continuous practice, you're going to create your plan. And you're going to see it in this room. You're going to see people taking a lot of trades that are not high probability trend trades. That's their plan. They develop their plan through their ability to read their charts. None of their trades are wrong. None of your trades will ever be wrong. But we'll always resort back to the advantages. You're going to create your plan based on your ability to read the indicators. And you're going to tell me what your plan is by annotating your chart. This is why I did what I did. Mark, hold me accountable to my rules. This is what got me into the market. Mark, hold me accountable to my rules. Make sure that I'm following my plan. And what you're going to find, and this is a true story, it's almost annoying, is I'm going to know your plan inside of a week of you writing it on your charts, and I will hold you accountable to it. And that's one of the great things about this classroom. But this is your simple consistency plan. So Haji, give me 30 days. Just keep it easy. Never fight the large chart direction or triggers ever. Guys, I say this every day. Every day. I say don't fight the large chart. And this morning I admitted that I had been fighting the large chart. As you grow with your rules or your ability to read charts, it becomes even more important to stick to your rules because it becomes easier to form opinions. So don't fight that momentum. Don't fight that direction. Define your entry and use the checklist to get in. Your great entry is the first step. Every great entry creates a manageable trade. Every great entry creates an opportunity to make money. So the same way we're keeping it very pragmatic and methodical for the entries, guys, we're going to do the same thing on management initially. And then once again, we'll back up. You will craft a plan tailored to your personal goals based on your experience reading the indicators. Maybe I should put that here. Little reminder. Whoops. I'm going to put this together. We're going to change the KISS plan a little bit today because you will craft a plan tailored to your personal goals based on your experience reading the indicators regarding management. But if you keep it pragmatic initially, if you keep it focused and simple and if-then based initially, it takes out the opinion, it takes out the emotion, it takes out the hope. Eventually, you're going to learn how to hold for bigger moves. But until you do, let everything you do revolve around a great entry. Let everything you do revolve around getting in at the point where the market is most likely to continue. Let everything that you do revolve around giving yourself the highest chance of success. And at this point, when you're in at resistance inside of favorable large triggers, there's two choices, two things that are going to happen. You're not in control of either of them. You're either going to get stopped out. And being stopped out in a high probability trend trade is going to happen 7 or 8 out of 10 times. You don't get to pick which one. It's just a cost of doing business. And it really is a very normal part of the positive equity curve. Or the market is going to recognize that you're a Nexgen user and you have all those advantages, and it's going to give you a reversal bar in the direction of the trade. Now you're going with momentum. You're going with a clear path. You have every advantage, and you're going to reduce your risk to a tick or two above that reversal bar. If I get a reversal bar, then I reduce my risk. And then once again, you're going to sit on your hands. It's not up to you to decide what happens next. You're either going to get stopped out for a smaller loss, or it's going to run to your first target. All that momentum and a clear path are going to carry you right to the $100 mark on your first contract. And $100 is not designed to make you wealthy instantly. $100 is just a way to get paid. It's a way to get confident. It's a way to feel good, to get the serotonin going. That $100 isn't like the end-all be-all, but what it is it makes you feel good about everything that just happened. It makes you feel comfortable with the idea that the large chart led the way. It lets you feel good because you heard Ninja Trader say profit reached, and you're going to move your stop to break even, guys. That break even stop is going to get hit a lot initially, but that break even stop is designed to remind you that it was the large chart that said go short, that it was the large chart that said there was nothing in the way. The large chart had the momentum. So you're going to sit on your hands and do nothing. And if you get stopped out, break even, it doesn't sting too terribly much. But with all that momentum and all the rules met, very often you're going to get that second target. And that second target is out there only $200 in the distance, guys. Again, that is not taking full advantage of the software. That's getting paid and out of the market before you let your guts take over as a brand new user, before you let your opinions and your hopes and fears take over as a brand new user. I'm going to tell you right now, $300 a day is a $1,500 week, guys, and that's a $6,000 month. And honestly, that's a $72,000 year from being able to pull off one high probability trend trade a day. And if this sets up 4 or 5 times a day, doesn't it make sense that you may see 3 winners a day to your 1 loser? That's 75%, right? So if you take 4 of these, and you make $900, but then you lose $200 on another, and you're up $700 on the day, man, that's a $3,500 week. And that's what is that, $14,000 month? And it just keeps getting better from the same trade. And guys, that's kind of what we're focused on initially, is learn to get into the market, right? And then manage it pragmatically. And let's go back and see. We had one set up, didn't we? Right there. Oh, I'm struggling with it. Where was that S&P one? If we took this trade, and let's do the whole thing. I'm coming from a termination. I've got a market with the potential to break the area, but it's not broken. And let's go through the process on a smaller, faster chart. Everything says up. And we wait for the reversal bar. Boom, boom, boom. And there's a reversal bar. But Mark is coming off of a 1-to-1. Doesn't matter. Large chart defines areas. At the time of the reversal bar, all I have to do is draw a little box from the top of my triggers to the bottom of my triggers, and then refine it from the highest point of support, which happens to be a mid-band, to the lowest point of support, which also happens to be a mid-band. Give me a Y if you guys are with me so far, especially my new users. Everything says up. Wait for the reversal bar. This is where it's likely to bounce, guys. My job is to right-click on this chart and activate a limit order. About 2 ticks above, right? That's at 25. I'm going to go at 75. And then I just wait. It's either going to get me or it's not. And it comes back, and it comes back, and now I'm in the market. And I'm going to put my stop where the market shouldn't go, out here beyond that window, right? Below those triggers. We'll make this one red. Is everyone with me so far? And on this particular trade, I have approximately, if I'm in at 75, 63, 61, that's about 8 ticks, guys. That's $100 a risk per contract. Is everybody comfortable with that? With the advantage of momentum and a clear path and determination? It's about $100 a contract. I've established my risk. I've taken my entry. Oh my gosh, and it's going against me. And I'm seeing red numbers, and I'm terrified. What if it goes down? What if momentum doesn't win? What if? Guys, don't get caught up in what ifs. You're still in the window. Things are good. You still have all the advantages. Uh-oh. There's another. This is where a lot of you guys start getting a little jumpy and you start thinking, man, maybe I should exit. What if I take a loser? Be okay taking a loser. Say to yourself, these assholes have to come get me. I'm not going to give them my money. And then momentum for the win. And watch this. There's my new stop. I've got 5 ticks of risk behind a reversal bar. And here's the best part. Where's my $100? From 63.75, I have to make it to 65.75. That's my first target. The reversal bar almost hit it. Where's my second target? From 63.75, I have to get to 67.75. There's my second target. The next bar prints, and I'm $100. You guys just made $100. Nice job. That contract comes off. It's gone. My stop goes to break even. I'm $100 up and not a penny to risk. Is everybody comfortable with where we're at so far? I'm not worried about if. I'm not worried about I hope. It's just pragmatic. And then the next bar prints, and I feel great. And the next bar print, oh, my palms stop sweating. And off it goes. There we go, guys. That's a $300 trade that fits the rules. This was a medium probability trade. The smalls were through, the large were not. But because we had a good bottom, because we had no divergence, because we had strong triggers, because we had a small window of opportunity, you're going to find that this one fits the KISS plan perfectly. Initially, you're out for 300. Let's see how far that momentum carries us. And we'll just wait for the first down bar. There's resistance. There's resistance. If you got out for 7 points, would you be mad? Anybody? I don't think so. The momentum says it might go higher. And it does. And the momentum says it might go higher. And it does. And the momentum says this area may break. And I'll be darned. Guys, your small chart has not blinked since entry. We are now up 10 points in the S&P. And there's your first down bar. And that down bar represents divergence on a 50-50, which is an exit condition. This is what I want you focused on for the first 20 days, is being able to find this entry historically, go through this same pattern. And look what happens if I circle the tail on the large chart. It lines up with the tail on the small chart. Your job is to take a picture, guys. I'm giving you the keys to the castle right now. Take a picture, and I want you to do this. I want you to take a big call-out box and go odds favorable momentum and draw a line to the separation between the triggers. And if you need to, write strong triggers, because that's how it's labeled as rule number 1. And right here, this is a 50-50. Guys, give me a Y in the room if you see that it's a 50-50. That the smaller through and the larger not. This is an important lesson. So on a 50-50, the path isn't clear, is it? Not yet. So if I forfeit a clear path, I need on the small chart no loss of momentum. That means no divergence. I need strong triggers, and I need a perfect low risk entry. And I got every one of these. So I entered at the point of support inside of favorable large triggers. Guys, this fits the KISS plan 100%. And if you took $300 on this, you felt great. But eventually, your great entry creates a management opportunity. It creates the opportunity for you to hold for bigger moves, for better moves. And that's what your spreadsheet's for, guys. Is after you take that trade and we have a conversation, I might have said something clever like, hey, with that clear path and all those odds favorable momentum and everything and nothing to stop it, you can hold this trade and get more from it. With odds favorable and a clear path, you can hold that last contract. Look for the runner. And guys, this is where your chart reading pays dividends. Initially, you're very calm and you're probably gonna be nervous as hell. But you're very pragmatic and very methodical, and you have a checklist to keep you in line from start to finish. And then you're gonna grow beyond that. You're going to become a chart reader. And when you become a chart reader, you're going to open doors. So let's see what happened. That's a textbook termination condition, ladies and gentlemen. That is a divergence high. Price reached it. Absolutely no trigger lines broke. No more long trades. That is a 50-50 on a divergence high. And look at that. A loss of momentum says it's not your highest chance of success. And sure enough, it doesn't work. And then there is support holds and pushes. No trade to be had. Support holds. It pushes. And now we're 50-50 on a key area. We're 50-50 from a good bottom. We're 50-50 with odds favorable momentum, which means if I'm going to take a shot at this, I don't want to see that divergence. And that's how quickly it all comes together, guys. Crude oil's being a silly goose. Crude oil was an ATM for me earlier. It was wonderful. But that's it. Isn't it cool how you can see the indecision, Chriselle? How you can say to yourself, well, shoot, I don't have rules met either. I don't have rule 1. I don't have rule 2. I'm just going to do nothing. But you have to believe, and I think this is the thing, you have to believe that eventually nothing to do works out into something to do. Eventually nothing to do, you're rewarded for sitting through that fight, right? So you start playing if then. If my triggers get below 75, if it's strong, if I get a trade set up, I'll go short. If 75 holds and everything reverses and I get a trade set up, I'll go long. But until that happens, I don't know, draw a picture, play a video game, right? Text your wife or your husband or your significant other or whatever you got going on. Scratch your dog, I don't care. But it's easier to do nothing because doing nothing doesn't cost anything. And guys, that's the first hour. I went a little bit longer because I know that I have some newer people in here. In regards to the path to getting to where you want to be, I just did my part. And my part Man, my pictures are opening slow. There we go. My part is to teach the trigger line, and the Fibonacci rules for when it's okay to trade. That's my job. That's what I get paid for. That's what I love to do, and I'm very passionate about it. Your job is to simulate. Remember, guys, that I know this stuff. I'm very good with chart reading. I understand the rules like the back of my hand. Your job is to practice them because you have a goal. You told us you had a goal. You want to be a day trader. You want to make money. You want supplemental income. You're looking $250 a contract, guys. You want to make $500 a day. So simulate, practice, post. Let's get you to that point. I can't help you if you don't post in the room. We're going to simplify. We did the KISS plan. You know exactly what you're looking for to get in the trade. Start filling your spreadsheet with pictures, guys. Start creating recognition through repetition. The only thing Nexgen can't give you is experience. The only thing Nexgen can't give you is repetitions. That is on you 100%. And I'm going to tell you that the people that post the most make the most. And I get emails all the time. Mark, I'm getting my ass kicked. That's weird, Bob, because I haven't seen you post in the room. Mark, I'm making a lot of mistakes. That's crazy because I haven't seen one post in the room from you. Except that winner, where you wanted to make sure that I knew that you took a winner. And guys, one of the funniest things that happens in this room, and it's human nature, I'm never mad at it, is someone will take, I don't have it, let me show a picture. Someone will show me a picture, and it will be super slow. It'll be this one, right? Dude, Mark, look at how great I am. Look at all the money that I made on the way up. And then right here, they forget to cover their chart trader. And over here, their P&L is negative $175. But right here, they just made $1,500. And this makes you feel good sharing that in the room. Hey, look what I did. This is great. I'm awesome. Look at how I made all this money. And then I look at your P&L and you're negative 175, which means that you had $1,675 worth of losses that you never asked for help with, that you never gave me the opportunity to help you with the chart reads. And I'm telling you guys, mistakes and losers, that's where the money happens. That's where you grow. That's where you get better and better every day. Being willing to show the losers. And it goes against everything. I didn't do it for my first month. It cost me $5,000 in 20 trades. I didn't use a spreadsheet. It cost me $5,000 in 1 day of trading, right? I didn't have a plan. It cost me $5,000 in 1 day of trading. Because I absolutely, positively, without hesitation, chose not to follow the path. The path that my brother, the CEO of the freaking company, gave me. And I decided that I was too smart for it. And I paid the price. That's how I came to trade or to teach this room, guys. Is because I made every mistake that the typical trader makes. And I fought every rule. And I never had a plan, and I never took pictures, and I never participated, and it kicked my butt 72 ways to Sunday. So I'm trying to save you from yourselves, but you still have to go out and make mistakes, and you will, but you're going to grow from them, and you're going to get amazing. Nothing to do, Chris. No rules met. Man, the NASDAQ killed it to the downside, didn't it? I wonder what that tail with odds favorable momentum looked like. It looked like no divergence, pull back to resistance inside of favorable large triggers. Did anybody make $300 on that one, Cav? That's got you written all over it, brother. Show me some pictures, guys. I want to see them. And now we're right to that termination. Right to that area with absolutely no triggers through. I don't know if it's going to break or if it's going to hold. All right, guys, I'm going to take a break. I am going S&P. They're trying, aren't they? They're trying. Let's leave crude oil. Let's see what they do. I'll be back in about 5 minutes. When I come back, I'm going to start clicking on the pictures that you guys have posted. I'm going to start associating them with advantages. Remember that there are no wrong answers. I had a feeling. Guys, and Cav, I'm going to give you a gold star and put you on a pedestal real quick. This is what you have to look forward to, ladies and gentlemen, with just a little bit of practice, with just a little bit of repetition. And then Cav's at the point where I'm just going to tell him, why the hell did you exit that trade, Cav? And he'll be like, yeah, I know. But you know what, Mark? $1,000 seemed like a pretty good trade. I'm like, psh, as if. Great trade, Cav. Beautiful trade. Rules based. I dig it. And guys, I'm going to come back and we're going to look at everybody's trades. We're going to look at everybody's charts. We're going to associate them back to the advantages. And it's on you guys now. The last half of class is discussion, not lecture. If there's something that you want to talk about, you have to tell me that you want to talk about it. I'm no good at reading minds. I stopped doing that when I got married. I'll be back in 5 minutes, guys. And I think we just got an awesome lesson here in crude oil. And let me know what you think. I bet somebody did. Who went long right here and said to themselves, no divergence, area inside of favorable large triggers, coming off of a termination condition, it's time to go long. Did anybody take that trade? I was notorious for taking this trade, not going to lie. And this is a relatively common long for people and a challenge for people. And there's a real simple lesson that comes out of it. And I want you guys to see this, and I want you to embrace it, is I want you to look at the large triggers. And I want you to see how flat and lifeless the large triggers are here. And in order to have momentum, and this is such a key part, in order to have that odds favorable momentum, the only way for it to happen is if the large triggers are wide and angled in the direction of the trend. If you have that absolute best of the best look, that's what pushes a market. And this is one of those instances, and I see it a lot, where people look at the small chart and say, oh my gosh, it's perfect, but the large chart doesn't quite support it. So it's an awesome, awesome lesson there, guys. Flat triggers do not provide momentum. And I'm just going to write that on there. I think I'm going to put this in my spreadsheet. Flat triggers do not provide odds favorable momentum. And I'm going to take this and I'm going to upload it to Screencast. And I'm going to take my link and I'm going to open this up. And guys, this is going to be one of my chart reading things. This would be a great one for you. Patterns that repeat chart reading, right? And I'm just going to drop it in here. And I'm going to create a hyperlink. And it's going to be called, I don't know, Flat Triggers Don't Boogie. And now I can go back and I can study this. And I can make sure that I remind myself that lesson. It becomes a great study tool. And that's what we were talking about. Now we got the breakout, right, Paul? And it gave us odds favorable. And we have a clear path. I wonder if we're going to get a reversal bar. If we do, I'm looking for my lowest point of resistance to my highest point of resistance inside of favorable large triggers. Guys, give me a Y if you see what just happened there. Crude oil has odds favorable momentum. Crude oil has no termination conditions. From my lowest point of resistance to my highest point of resistance, I'm begging and pleading for that small crowd to do their thing. For the love of fuzzy, give me a pushback.
Order pending.
I'm going to activate a limit order a couple ticks below that lowest point of resistance. I bet he is. And if it pulls back, do I have a rules-based trade? If it pulls back, do I have the advantage of momentum? Do I have the advantage of a clear path? Do I have the advantage of being able to identify where the market is most likely to continue? If the answer is yes, I'm obligated to pull the trigger on this trade. The sad thing is there's just no guarantees that it's going to come get me. Look at how my window of opportunity changed with that push down. Now my lowest point of resistance is a little bit lower. My mid-band came down a little bit. Do I still have odds favorable momentum? Do I still have a clear path? And did 2 divergences kill a trade? Or is it 3 divergences that create a termination condition? These are the things that you have to ask yourself. This is not a termination condition. I haven't reached an area. I'm just hoping for a push. And if I get it,
order filled.
I'm in the market. Whoops, I didn't have stops and targets. If you ever get in without stops and targets, we sold,
order
so I have to buy. That's the opposite. And there's outside of the window. And let's just see if it makes 100. It made 100, so now we're break even. You can't see it though, so I'm just going to move it a little bit. Let's see if it goes to 200. Or if it just runs to that fib. Are you guys, look at the risk after the reversal bar. Look at the momentum. Can I get like a Y in the room or a hallelujah or something? And the only thing that would ever take me out of this trade, guys, is a third divergence. Because a third divergence may terminate the trend. So if it happens, I'll hit close. If it doesn't happen, my pragmatic, mechanical management says that I have to stay in the trade. I've already made 100, right? And I'm break even. You just can't see it because I wanted you guys to be able to see the number. I guess there we can. I'm break even. And it's either going to go to 200 or it's not. Here's 130. Oh, it's back to 90. Smaller, faster chart fluctuate. What does the large chart say? Does the large chart say down? Does the large chart say momentum? Does the large chart say clear path? Don't get caught up in these little fluctuations, guys. Nothing bad can happen to you. You already got paid. You're already break even. Everything says down. And let's see. That's a sell. So if I buy limit 1, that's your $200 right there, guys. You have no risk. You have the advantage of momentum. You have nothing in the way. You took the best entry, and even if you didn't move your stop, you're risking $30. You got paid $100 already. You have zero risk on the trade, and you are 4 ticks away from a payday. The only thing missing is repetition so that you don't hesitate. But guys, we knew that we were going to enter this trade right here. And if third divergence prints, it's going to happen a couple ticks above this. I might go break even +1. I might cover commissions on this one. But until it prints, guys, we're in short. We're committed. We have odds favorable momentum. We have a clear path. There's nothing in the way. Now my small triggers are in favor of the trade. Do you see that? Even my small triggers are pointing down now. 47. That's where. Boom. There's your $200, guys.
Order canceled.
I love it when the live market gives us an example. I wish I would have had 2 contracts in there. So let's go through. Let's take our picture. Did we have odds favorable momentum, ladies and gentlemen? Did we have smalls below the large, the absolute best of the best? I feel like that's a yes. How about a clear path? Price had not reached an area, and since it hadn't, we had a clear path. So guys, if price reaches an area and it's a termination, doesn't that mean that that's a target? And then here's the only other thing that we needed. Thanks, Paul. I learned that from you guys. I needed a pullback to an area inside of favorable large triggers. Notice how I write that out, because this is my focus. And Alan said bingo. Did it go to the fib with all that momentum, Alan? Is anybody bummed about $300? Made it to the fib, guys, where the market is likely to go. And that was just one contract. Oh, I risked $30 to make 190. Guys, this is what we do. This is Nexgen. You just saw it live. I didn't handpick this. I didn't take this picture from last week. It's not from the resource materials. Guys, this is live right in front of you. This is a rules met, high probability trend trade that went exactly where we expected it to go. And then here's the best lesson. Is you had to sit through all this bullshit. Pardon my French. You had to sit through all this no rules met. But when you did, Chris L., was it worth it? Alan, was it worth it? Paul, was it worth it? One trade, one winner. You have to go to the office. Sorry about that. I'm telling you guys, if you sit on your hands when there's nothing to do, it makes it easy to capitalize. And look at those trigger lines. This is where I would have a runner. This is where I would say the market consolidated for so long. They're going to have to give me something significant to take me out of this trade. Otherwise, I'm going to look for the next key area. And they may. Divergence print, something like that. If you got paid at the fib, that's awesome. That's where your chart reading creates more management. So I'm glad that happened. I'm glad that was live. I love that you guys got to see it. And now I'm going to go through it. I'm going to start looking at the trades that you guys have posted today. And we're going to see what you guys have been up to. Cav got us going. One of the reasons Cav is so stinking good is because Cav keeps posting in the room. Cav, you went short. I see a stop up here. I don't know where you went short. And then everything is down, but you're on the right side. Putting a lot of faith in the blue line, right? And Cav, this is the one that was eating my lunch. Hoping, right? Fighting triggers, fighting triggers, fighting triggers, fighting triggers. Hoping this blue line did its job. This entry is aggressive. This entry with a close above, the higher divergence, has a much better chance if that market's going to go up. It's a great looking trade. That's the one that's been kicking my butt. Just getting in a little early, fighting that large chart, not letting it turn yet. And then GWC, loving that momentum. Momentum style trade, not so much a trend trade, but that termination does end up holding. You get multiple divergences. You are trading directly into fibs. You're trading into two areas of resistance. But the momentum wins. And I think that's one of the great lessons there is trading into resistance isn't always a good idea. But even momentum, gosh, momentum helps so much. So we'll always point out the good and the bad, right? And then Ron says when everything's on its way up and all that momentum in the path is clear, going to take some money. Beautiful trade, Ron. I like it. Take the money and run. And that was that little update, that blue fib. Happens. All right, who's next? And guys, I want to remind you that it doesn't have to be your chart to get feedback, right? If you have a question about somebody's chart, let us know. And then Ron, this one's absolutely beautiful. Clear path, odds favorable, clear path, odds favorable, and you take a little chunk. Not a high probability trend trade, but that is an outstanding chart read. All right, JW76ZX, 50-50 trade, right? And then JW, I haven't seen a whole lot from you, so I want to talk through yours if you're okay with it. Are you in here? Awesome. So one of the things that I like to do, especially with people that I'm not super familiar with, is I want to go through the full process. I want to go through the checklist with you if you're cool with that. So I want to take the high probability trend trade. Oh, JW. Oh, okay. Changed it. I got you. Hey, JW. Well, I have seen you then. So it's a 50-50 trade. And I think that this is one of the things that's key. Odds favorable momentum makes me feel like I have to win, right? 50-50 lets me know that I'm up against an area that hasn't yet broken. Does that make sense? There's a big difference between the two. One's a clear path and one is not. So if we go through the checklist here, and this is just the KISS checklist. Odds favorable, yes. Small outside of the large on the 5-1, absolutely. No divergence on the 5-1. That's our first no. From a good top or bottom, it's a yes. And then divergence, no trade from the KISS plan says don't do it. And this is crude oil. So as you pull back, I think your entry is great, JW. Especially from a good top. One divergence doesn't typically scare me either. I think that you may have held that one a little longer. And one of the things on 50-50s, and I think this is a good conversation, is on these 50-50 trades, you know that they're not high probability. And that's important that you guys understand that. One of the things that I'm looking for on a medium probability trade, especially one of these 50-50 trades, let's just reduce it a little bit. Here's my window of opportunity, right? Like that's it. And I love it. And that's where it should be. Guys, I'm stingy with stops. I'm literally like right here. If it doesn't bounce from these 1-to-1s on a 50-50, to hell with it. I don't want it. I'll let everything roll and I'll try it again. If I need to. But I would rather take a small loser on a medium probability trade than go full loser, right? I'm not putting $300 on it, hoping that an area breaks. Does that make sense? JW, I hope so. It's a good look, man. I love everything about this look. I just don't know that I would put that much risk on it. And one of the things you'll see a lot is that high end is right there at those synthetics. I might even get in a little bit higher because it does have that loss of momentum. So I think it's a great looking trade. I just think the only thing that might be a little different is my risk management, not putting so much on it. And then guys, there's that 50-50. It's ugly. It barely peeks its head in. Divergence prints, weak triggers. Ugh, that's a horrible look. And look what it does. It pushes higher. It pushes higher. And then David W., you had one that didn't work. We'll look at it in just a second. I'm going to scroll up and we're going to go try and keep these in order. Let's see who is next. Cav. Have direction, triggers wide open to the upside. Divergence. And in down here, place limit order inside the large trigger. Second divergence form, stayed in trade due to the strength on the 34 chart. All right. So I'm trying to figure out, let's see if we can get a timestamp. 948. So you're in somewhere about right here. Cav, large triggers down, but smaller up. You're coming from a termination. These are just hard, especially when you're printing multiple divergences from a fib that all the triggers are below. You say that you're staying in because of the 34 strength. I don't think they've had time to go strong on you yet. Not until all the way over here. Can I show you a higher probability way to take this? And this is that patience piece once again. Do you see where the smalls break above and everything starts to go green? But you start to get that strength? Because this is your problem area, right? This is the holy crap, I hope it breaks area. Right here, price gets above and snaps right back to it. And your small triggers are strong as all get out, and your large triggers are starting to turn up. And you just kind of get over your problem area. And the difference in price is about 3 ticks, Gav. Does that make sense? The difference in price is about 3 ticks. But at this point, you're smaller above the large, and everything is turning green. And I love this little stab back for the continuation to get up there. That's a tough hold, coming off a fib with multiple divergences and a lower divergence and weakness. And I don't think that your 34 was strong enough to justify the risk, if that makes sense. If it looked like this all day long, but it wasn't there yet, you were hoping that these would roll. I hope that makes sense. It's a good look. And you're reading charts insanely well, which has you jumping in just a shade early, I think, because you're anticipating what you know is most likely to happen because you are a great chart reader. And then Paul, 50-50, no divergence. Let's see what you wrote. You didn't. You just put arrows everywhere. Divergence, divergence, divergence. Good bottom. Odds favorable. That was that one, 50-50 out of a range. It either runs like a crazy thing or it loses quick. That one decided to win. And then Tony the Tiger. And there's that same look, kind of. And it's in a little later. You've got the good bottom and it starts to roll and you're coming up. And there's the problem area, letting the problem area clear and then looking for the entry. By then, momentum is established, and it makes it pretty easy to get up there. Nice job, Tony. And then, Cav, that's kind of what I'm talking about. And I'm not saying that Tony's doing it better. I'm just saying that he's a little more, rather than hoping it breaks, he just lets it break and then looks for an opportunity. A lot of times that pays dividends. And then that was absolutely beautiful short. We looked at that one. And then Paul, 50-50, weak triggers, right off a 1-to-1, pivot, stop out, chose not to take that one. Not coming from a good top. Great patience, Paul. And then Ron, wait for price to clear, same old trade, outside, yada, yada, yin yang, quickie. Boom, boom. Easy peasy, right? And then Ron said, I bet he's out of his momentum trade. We're going to teach you to take trend trades one day, Ron. And then, Collie, you say the question is what would be the stop using the 34.5? And does that fit the trader's risk profile? Which trader are you referring to? And whose trade are you talking about? Are we talking about Cav's trade? This one? The challenge is I can't answer that. Where does your stop go when you're trading into an area? No, I like it. And I'm trying to be honest with you. Is I can't define where the stop should be because Cav has an idea of what he's doing and I'm not sure. So for me, that's an area inside, right? So does my stop go below that? Does it go below the red synthetics? Does it go down here below the 1-to-1s? And I don't know Cav's stop placement plan well enough to answer that question, which is why when I see trades like this, Collie, I talk about the advantages that I see and I talk about the potential disadvantages. And one of the disadvantages is that this is termination condition all day long. And then when it starts producing 1, 2, 3 divergences, once again, it creates a tremendous amount of challenges for me that in my own personal trading or just in the basic realm of what creates a potential termination, I've got that met so excessively that I can't really define where a stop should be on this one. He did it right, though. He kept it outside of the synthetics, probably below the midband. And it worked out for him great. And I think it's okay to ask the question. I don't have an accurate answer for you just because it's not my trade. But he definitely had it below the synthetics, which is below the large, which is below the midband, probably. Because he's expecting that continuation. No, that's okay. And I don't know. How do you establish a risk profile? Use a 12-tick stop. Perfect. So you were in at 36.75, which means that your 12-tick stop would have been about 24.25, which puts you right below everything, right? There you go. Collie, I like it. So my risk, or trader risk profile. My risk profile is stops where the market shouldn't go. And I know that sounds like a Sunday school answer. But what that means for me is that if I'm entering at an area inside of favorable large triggers, the market shouldn't go below that window of opportunity. So for me, this is my only acceptable risk. And it's not just a number, right? Like the 12 ticks is a reaction time number. My 12 ticks may be all the way down here initially, but the market shouldn't go there. So I'm not going to risk 12 ticks on it. And sometimes 12 ticks might be right here. And I'm not going to put myself in the kill zone. So I might go 14, 15 ticks, right? And Cav just made that point. If there's a 1-to-1 or something like that, he'll use that to protect him and then his stop behind it. And Collie, this comes through repetition, right? Yeah, and that's it right there. Like I have 24 ticks on NASDAQ. It's only $120. But sometimes my stop is 2 points and sometimes it's 5 points. And it just depends on the trade and where the market shouldn't go. And then you can establish risk on trades. I think this is a great question, Collie. When you have a recipe for a trade, right? So this fit Cav's recipe for a trade, which means that he knows where he's getting in. And it also means that he knows where he's going to jump ship if it's not working. And that comes through the repetition of understanding what it is that you're looking for. Perfect trend trade short. The market shouldn't go above these areas. If it does, then I'm out. And you'll see that pretty consistently. This one says perfect trend trade long. The market shouldn't go below these 1-to-1s. So that's where the stop goes. And it's a different risk. It's a different risk than it is up here. And it's a different risk than it probably was down here. So knowing where your trouble is and knowing where the market shouldn't go, that's how I define my stops. That's how, when we talk about the high probability trend trade, that's how we define the stops here where the market shouldn't go. And then that's very much here. If you took this one and you were in at the mid-band for some reason, and I don't think it's a great looking trade, but if you were, there's your window of opportunity, right? So where shouldn't the market go? Collie, on this one, that's about as much as I'm going to give it. I'm going to give it about 4 or 5 ticks. It's worth $50 to me to see if this thing decides to continue down. Does that make sense, or am I rambling? Understanding where it shouldn't go is the key to stop placement. Because when you understand that, let me go to another picture. I've got one that says, don't put your stop where the market should go. Right here, no exits where entry should be. So if everything is going up, Collie, and everything is going up, and I'm in this trade and it's absolutely beautiful, with odds favorable and a clear path, it doesn't make sense to have a stop right where the market is most likely to continue. Does that make sense? This is a great picture of that. Taking profits, and then as it pulls back, getting into the market too high and exiting. And that's 9 ticks. But does everybody see how the exit was at support inside of favorable large triggers? That is a prime example of don't put your stop where the market is likely to go. You have to put it where the market shouldn't go. And that's the difference between winning and losing in this particular trade. Can you guys still hear me? It got real quiet. Great question, though. Sorry if I rambled. Didn't mean to. And then Paul, we took that one live. We know it was a good trade. It fit the rules. We were obligated to take it because it met all of our requirements. And then you take your exit when the third divergence prints. Get paid. You know it's the trouble spot. Divergence prints. You take your money. Alan, same trade. High probability. Look at the entry. First profits. Second profits. Absolutely beautiful, Alan. D-Rock, same thing. What's going on here? 50-50, sticky on midband, all fibs still red at time of pullback. Hey, D-Rock, where in your plan does it mention fib color rather than trigger location? Whoops, hold on guys, they just booted me again. Apparently I'm asking the tough questions and it made the Discord people mad. And it's funny because I mentioned this earlier today. All right, you guys back? Can hear me? See me? And I mentioned this earlier today. People are going to reference colors that don't matter, right? Because the recipe for a trigger for a termination is trigger location. So you've got a 50-50, absolutely, not coming from a good top. That's okay. Are you back? I was just asking, where does fib color play into your rules? At what point did you stop using trigger location and start getting into it? And I think this is, and D-Rock, it may not be you. You give it a higher probability? Okay. And then you get in at the area. I like it. I love the risk on this one. I firmly believe, and this is exactly what I was talking about on somebody else's. I firmly believe, and call me crazy if you want, guys, that the color of the fib, I just don't know that it should work its way into your day. Because watch this. Here it's yellow, and the triggers didn't break, right, D-Rock? So you knew it was medium probability, so you knew that you had to manage assertively. Here it's hot pink, and the same is true. Here it's black. Here it's green. It never changed the location or whether or not it's likely to break or hold. And I think that this is one of those things where our brains say, hey, it's not a high probability trade, But if I talk about this being red, it makes me feel better. And you still managed it beautifully. I really think you did. And this is just a market 50-50 from a bad top. Yeah, no worries. But I think that helps. And it was funny, D-Rock, because you weren't here this morning. But we talked about somebody's going to, if colors mattered, you wouldn't be able to change color. I guess so. Yeah, that's true. You can change colors in the software. And then I see you're working market flow into it, which I like. I don't have a problem with market flow at all. So let's talk about what I see on market flow. And I'm not sure if you see the same thing. Things that typically happen on a market flow. If divergence prints, it loves to push higher. If you get a breakout bar after divergence prints, it loves to push higher. You get that HVA line, it loves to push higher. This white bar doesn't guarantee that you're going to get a signal. And this creates a great opportunity for you if you're going to take this trade, D-Rock. With the divergence, with the weak triggers flat, you can expect a bigger push. And where is that first spot for a bigger push? It's right there at the HVA line, right there at that high volume area. And for me, that helps a lot. And this is a lot about what John Novak teaches. But that little, when divergence prints, and then it's followed by a white bar, for me, that's a pump the brakes. That's a, okay, just hold off. I'll wait for a signal. And I don't know if you've gotten that far in your market flow usage, but your trade setup was good. Everything looked good, right? So if you wait for a little confirmation on the market flow when things aren't perfect, especially if market flow is telling you it's not perfect, you could have waited for a down arrow right from the area, right from that mid band. You could have waited for a yellow reversal bar right from the area, or you could have waited for one of those antenna bars just to give you a little bit of advantage. And then what you'll notice is that you never got one, and it'll help keep you out of that trade. And that's kind of that next level on market flow where you can take it and give you just a little bit of patience. So as you grow with market flow, D-Rock, and I know that you're working this into there, tell me what you were thinking with your market flow chart the way you just did, and let's just keep working on it together. Right? I think you did a great job of annotating it. Here, let me give you the link. And then, of course, and I think this is the biggest thing about market flow when people introduce it, is that if your other charts don't say go, don't let market flow talk you into stuff, right? Don't let market flow talk you into short trades with signals when the rules aren't met. And that's a really big part of it. And then my favorite picture, because when John gave me the market flow chart, I took about 173 trades that day. If you just stare at the market flow chart, it's going to drive you nuts. But if you let it be a confirmation tool for your already amazing trade, it helps a lot when it's just not quite perfect. Great picture, D-Rock. Great trade. Just didn't work. And then David W., let's see your trade that didn't work. Termination creates odds favorable. It pulls back right to the area inside of favorable large triggers. David W., dude, I got to be real honest with you for a second here. Are you in here? Man, I would have lost this one with you 1,000 times. 1,000 times I would take that trade. I wouldn't hesitate. I wouldn't even dream of hesitating on that trade. That's a beautiful trade. Were you, Kev? It's a great example. And the hardest thing to do, David, and I'm not saying that you're struggling with it because you knew that this was the cost to do a business. Oh, you actually went to Florida to go get a class on it? Right on. Guys, when you take this loser, if you go through your checklist, if you go through your rules and you have it, right? David's like, crap, a loser. He goes, wait a minute. I had momentum, a clear path, and an entry area, and dude, I was coming from a great bottom. He's like, I gotta take this trade. I love this trade, David. I'm sorry that it didn't work out for you, but all day long, brother. This is one of those ones where I would literally steal and go to my spreadsheet, and I'm going to put you in because I believe in the methodology so much. I believe in the look so much. I don't mind putting one that doesn't work because it was perfect. In every way, it was perfect. Just somebody that wanted it to go down, pushed it down. Great job. Cav, I forgot you've been around that long. And then here we go. Mid-band holds, everything rolls, odds favorable, pulls back to the mid-band, right inside. Beautiful. 2 divergences doesn't scare you. And then you're like, wait a minute. 3rd divergence prints. I like that you got paid there, Cav. Good looking. You know, I think a lot of people walk away every now and then for one reason or another. I've met a lot of people that have done it. And I think that sometimes when you start, you're excited. And maybe not as committed as you thought you were. And you know that it works, but you can't find your groove. Had no time, yeah. And now you got some time. I love it. And you're killing it, dude. You'll wonder why you ever walked away if you keep trading the way you trade. And I think that's all our picture. You retired? Who does that? You got to do something. I would go nuts. Ron, you did? I'll tell you what, guys. I'm a 2-job guy. I love my job with you guys and I trade. Gosh, I can't be done at noon and do nothing for the rest of the day. And I don't have the body to play golf every day. It hurts. Sold the business and ran. I love it. Good on you guys. You read a lot? That's a good thing. I draw. I paint. I tattoo people. That's my thing. That gets me out social. Kind of cool. All right, so let's see what we have going on here. Shoulder problem. I'm trying to avoid the shoulder problems. I'm probably going to get a rebuild this year if I had to guess. Background is green. Triggers are red. And you know what? Yeah, Brian, my wife was like, you got to go do something. You can't sit at the house and do nothing. Oh, Collie, I need that. I've got screws and rods in my back, and I've torn and separated my shoulders. I've got a lot of great stories, but I've got a lot of internal damage. So I swing like an old guy, unfortunately. And I probably compensate for things that mess my swing up, but it's okay. I still have fun. Still have fun. I like the Eat Chili Dogs plan. That's a good one. Oh, man. Hockey would do it. Internal damage from the neck up. It's that loose nut between the monitor and the mouse, right? Messes things up. So, guys, crude oil says sit on your hands. Let's wait and see what happens. The NASDAQ is just drilling it to the downside. And then the S&P tried but couldn't. And now we're into that little spot, right? That's a pretty big fight going on right there. It's already 11:20. You guys are doing great keeping me busy. I love it. For you guys that find yourselves nervous, for you guys that find yourselves thinking you can control the market, whoops, did I just share it? No. I just dropped a PDF in the room. It's called Emotion-Free Trading. Guys, it's a great read. Cav, freaking beautiful. Except for that long. Here you hoped. And Cav, there's that patience piece I'm talking about, right? No, dude, I took that same move this morning. I love the recovery, though. You said, wait a minute, everything's down. I don't even know where your large chart rolled. How did you get green synthetics when these were just screaming down? Something doesn't feel right there. Now I have to go back and look at some of your other stuff. That looks like they make sense there. Starting to roll right at 1050, starting to roll right at 1050. But look at it here. This is showing a roll. Are the timestamps messed up? Oh, it is. This is two very different spots. This isn't showing the top of it. It might not have been that stupid. I just can't see what it looked like on your large chart. But then you go down with everything. And then, Cav, there's that great example. Let it break and then pull back, right? Boop, boop. Because now it says, let's go. Smalls are on the right side of everything. I'm telling you, that piece right there does me a world of good. That piece right there keeps me, it eliminates hope, and it goes, man, now I got a fighting chance, and I love it. And great job taking that one down. Good trade, dude. I'd love to see that one at the top, though. I'd love to see what it looked like up top when you did that. I could probably find it. Here we go. Hold on. Let me just go to the NASDAQ. So you had 50-50 on the pivot stop out, and you went long. Probably right about there, right? I see why. I definitely see why. That divergence high got you. Great recovery, though. And then, how to make a $500 trade. Feel bad. That's one of the things you got to get over. Is you got to get over the idea that every penny is yours. And if you're taking the advantages, right? If you're taking those little pullbacks, gets below, pulls back, everything tends to work itself out. And now we're in a holding pattern, right? Weak triggers at support, no triggers through. How's that for a red flag? And then the S&P, support. Cav, you think it should go up now? I think resistance has a good chance of stopping it cold with the large triggers still down. I can't go long yet. This would be one of those instances, Cav, where if it's really going to scream up, break and pull, right? Break and pull. But right now, my large triggers are down. My large are down. My synthetic are down. We're getting more and more indication that the bottom is coming into place, right? I don't know if I want to be first. Brian, the European starts at like 2 a.m. Eastern. There's people taking trades in crude oil in the middle of the night. I typically start looking at it between 5 and 6 a.m. Central. And that's okay, Joel. That's okay for the large triggers to keep you out. Now we've got that little gap theory working. right? So we got to see. Here's a decision-making point. I'm not sure the exact time it closes, Brian. Probably 3:15 with everything else, and then it just opens right back up. But crude oil tends to slow down a lot after the morning session, is what I've noticed. Um, I prefer to not trade crude oil afternoon central. It doesn't work so well for me. So there's that good bottom. Triggers are starting to roll. Smalls are up. Large is a full bar away. Guys, this is what we call the gap theory. When you hit an area and your large triggers remain a full bar away, it may close the gap. It's not guaranteed to close the gap, but it certainly may close the gap. And now we're just kind of waiting to see what happens. So if you're the breakthrough and pull back guy, you may have gotten your signal, but you know that we're still fighting, right? That the good bottom lends itself a little bit. We'll just kind of see what happens here. This is where you're checking your rules, guys. What do my rules say about this? My rules say, with all the triggers below, I'm willing to sit on my hands. Some people say I'm willing to take a shot at support. Some people say it's got to come back to those large triggers a full bar away, and then I'll reconsider longs depending on whether or not my rules are met. And some people went long right about here, and they're holding for the big move. So everybody's got a different plan. Everybody has a different approach. My trading plan has me managing my long right now. And my new risk would be somewhere around 870. But my plan's probably different from your plan. Termination, directly into resistance. Every trigger on every chart is down, right? But we can't go into support. Is that gap theory going to get it, guys? What do you think? What do y'all want to talk about? You want to talk about, I don't know. What do you think? We've talked about rules, talked about advantages. Ron, we're not going to talk about bikinis. I got in trouble. Oh, absolutely, D-Rock. I think when it's not perfect, it's pretty cool. That little bit of confirmation is pretty cool. If you're a market flow plan or fan, my brother's new class is freaking amazing. And it's funny because my brother is very happy but not satisfied, right? He's always looking for new things. And when you're his little brother, he tells you about them all the time. Mark, look at this, look at this, look at this, look at this. And I've gotten to the point to where I typically, there's not so many. I typically ignore him when he gets excited about things. Because he's always looking, always searching. His brain never stops. And I watched him spend about a month and a half, almost 2 months, working on this methodology and what he's looking for in these patterns. And I watched him take like 50,000 pictures. And I had to look at every picture and not understand what he was doing. And it terrified me. It absolutely terrified me. And I spent a week with him. I was his guinea pig before he started doing it. And after a week of working with them, I simulated for another week, and I did about 7 or 8 days of market replay. And I have easily doubled my daily goals. Almost every day, except for the 2 days where I started forming opinions. And then I had to get back on track. But I think I'm already up 12 grand on a 2 lot for the day, or 1,200, excuse me. It's confident. It is simple. Um, it's just different. It's a different look. It takes a different set of rules and a couple different patterns, and it creates pretty cool opportunities. And I'm a huge fan of high probability trend trades. I'm a huge fan of great 50/50s. And you may not need more, but I'm thankful that I did it. I'm thankful that I took the class and that I'm getting the feedback. So Mizzy, how I use 5-1 markers. What do you consider a marker? Maybe that'll help me answer the question better. This one, the reversal bar marker, it has no bearing for me. And 90% of the trades, are you trading NASDAQ? That's the only market that it has any influence on for me on the 5-1. So if you're trading the NASDAQ, Mizzy, okay, then this is perfect, and this will be a great lesson. I just wanted to make sure. So when I'm trading the NASDAQ, the rules on the large chart never change. Are you comfortable with your rules, odds favorable, clear path, all that good stuff on the large chart? So kinda. So that's the key. NASDAQ is going to eat your lunch if you're not good at the basics. It really does. You have to have odds favorable. You have to have a clear path. That's such a big part of NASDAQ. And then when the reversal bar prints, this is where I use that reversal bar marker. When I'm looking for my areas, Mizzy, and let's look at this. So this was a 50-50, right? I had odds favorable, but I didn't have a clear path. When price got to my area right here, my small triggers would have been below the reversal bar marker. And let me pull it up and show you the picture. As this is pretty similar. When price gets to my area, if my small triggers are below the reversal bar marker, I sit on my hands and I wait. I wait for a close above or something like that. If I get to the area and my small triggers are above the reversal bar marker, well then I'm comfortable getting in. So if they're a full bar away, price reaches the area, the small triggers are a full bar away, which means that they're below the reversal bar marker. I get in at the area. If the smalls are less than a full bar away, I sit on my hands and I wait to see what happens. That's how I'll use it with NASDAQ. And look at that. The smalls for the win. One of the things that people forget is that the small triggers on the NASDAQ, or your small chart on the NASDAQ, is the same size as your large chart over here on the S&P. And you would never fight these triggers strong against you, right? Because, oh my gosh, all the momentum. The same is kind of true on the NASDAQ. These small triggers come down strong, it's likely to push lower. So a lot of times what I'll do is I'll wait. When everything still says up, I'll wait for a close on the correct side of the small triggers. And it's a little bit piece of patience because look how they behave as resistance when they're coming down that strong. Large chart says up, but a close on the correct side keeps me patient. That would have had you in here at 82 rather than run over at 85. And then when you get back to the problem spot, of course, you want to manage with that divergence and things changing. Does that help a little bit? NASDAQ is a different beast. NASDAQ moves 3 to 4 times faster than crude oil or the S&P. And NASDAQ can overrun a little bit. NASDAQ can push past the best area. And that's where that entry rule came in. Because I blew out about 8 or 9 Apex accounts trying to learn the NASDAQ. Run, divergence from a great bottom. You're looking for the reversal bar marker. Brilliant. Nice trade, Ron. Really shouldn't work trade. You're fighting everything. I mean, you're fighting everything. Made it 2 ticks from the white bar. Got to respect that resistance a little bit, I think. I know, Cav. NASDAQ is fast. Setting up for what, Chris? So I've got a good bottom. I've got odds favorable momentum. My smalls are eking through the 1-to-1s and my large are below the areas. So high probability or medium probability, Chris? What do you say, brother? 50-50, right? So let's go through our mental checklist. If I'm going to look for a trade, the first thing that I need is a pullback. At the time of the pullback, I have to look for my triggers. I just don't have any areas at all, like not even close, right? So if it pulled back now, Chris, that's kind of tough. So I'm almost hoping for a little bit of a push. I'm almost hoping for a little bigger shove. Let these small triggers get a little further above. Let these large triggers come up and start chomping their way through, right? And I'm just waiting because my rule number 3 says area inside of favorable large triggers. And if they're all the way down here and I get in at a mid band, there's a pretty good chance I'm going to get overrun. And then there's your 50-50. Divergence at 77. I'm not sure. Which chart, Ron? ES? And then you see again, I don't have any areas inside of favorable large triggers. That kills my rule number 3. At 77, you have divergence? What am I missing? Ah, there it is. It was out of the picture. And then a 1-to-1 at 81. Yeah, those don't have any bearings on what I'm looking for. These are in the distance. These have absolutely no impact on what I'm doing right now. I'm hoping maybe 77 gives me a push back. Maybe that little line in the sand. Or that 1-to-1 at 81 gives me a push back, right? Maybe that's what you're saying there. And to that, I agree. There we go. Good stuff. So Chris, we'll see if that sets up. Gives us some rules. Price reached, divergence low, absolutely no triggers broke through. Man, from a bad top, divergence prints. My KISS plan says on a 50-50, actually into a termination, that's just rule number 2 not met, right? Decisions are made at fibs, guys. Look at all that nonsense. Been a very stressful day. Man, I wish I could use a beach day. Of course, it's been like beach days here. It's been, I think it was 72 yesterday. Not bad for December. Take that all day long. I'm going to take you up on that one day. Cav, you take the last shot, 50-50. Just doesn't work. Just doesn't work. A lot of risk. David W., I am in Dallas, Texas, or just north of Dallas, Texas now. We made it back to Texas about a month and a half ago, I think. No beaches up here. No, there's not. But that's okay. I'm pretty good at trading. I can get to any beach in the world and make money there. Sell me one. I'm not falling for that again. Is it cold this morning, Debbie? I haven't been outside. It was beautiful yesterday. D-Rock, do I enter with a market order? No. There is a cost of confirmation, D-Rock. Waiting for that confirmation, I hit buy now or sell now. So you're going to be in 5-6 ticks away from the area. But the cool thing is that you have a little confirmation. But there is a cost of confirmation. I don't have a range chart set up. Let me build one real quick, and then I'll get to the next question, Tony. I'm going to build a chart. I'm going to build a range chart real quick for you, D-Rock. This is the S&P. Let's have some fun. All right, Cav, you too, man. Enjoyed it. All right, so Tony, the NASDAQ example with a good bottom. You wait for the small triggers to be above. No, not at all. The idea, Tony, oops, that's the wrong one. Hold on. Is that the large chart has to be right? The large chart has to be right. The large chart has to be odds favorable. The large chart has to be clear path. The idea for and this is a trend trade entry, is that when the market pulls back to my area, Tony, I'm looking at where the small triggers are in relationship to the reversal bar marker. That's it. So if the small triggers are a full bar away when I get to the area, I'll enter at the area. If the small triggers are below the reversal bar marker, whoops, that's a dead link. Let me find it. If my small triggers are closer than a full bar away, I'll sit on my hands. And because what you'll see a lot is they behave as support or resistance. And then here's small's full bar away. Makes it easy. Small's a full bar away. Makes it easy to get at the area. If they're less than a full bar away, look how they act as resistance. Running your butt over. Does that make sense, Tony? That's all it is. This is the study that I did when I started with NASDAQ, Tony, because I blew out like 9 accounts. So I started going back through all my pictures and I started looking for this common theme. And what I realized is that on the NASDAQ, these small triggers will run you right over on a seemingly beautiful trade. So if you just respect them a little bit, it works out. And then D-Rock, let's go through and let's talk about confirmation. And let's see if we can come up with a good example if you want, if you have time. So what I did, Tony, and maybe you want to do this too, maybe you don't, it's okay, I'm cool either way, is go back to trend trade losers on the NASDAQ and look at the relationship of the small triggers each and every time and see what it looks like. So D-Rock, I'm going to circle this right here. Doesn't make it to the mid-band, right? Doesn't make it. So this confirmation doesn't mean anything. My rules aren't met. Let's see if we can find an actual trend trade. Here we go. Everything says up. It's super strong. And you're saying to yourself, man, it's 50-50 on a divergence high, and it looks really good. Let me see what my small chart says. Well, my small chart, or my range chart, says odds favorable momentum. That's the first level of confirmation. And you guys that are working your way into these range charts, confirm the momentum. So D-Rock, that's always my first thing, is do I have the same momentum on my range chart as I do on my large chart? And if I do, that's awesome. So where's my trade supposed to come from? It's supposed to come from right here, support inside of favorable large triggers. And it missed it by a tick or two. But you're saying to yourself, it's 50-50. It's coming off of 1-to-1s, whatever. And I want you to see two things. Here's a market flow signal. Notice how that it's absolutely nowhere near support inside of favorable large triggers. This is a huge part for market flow, D-Rock. Don't let this sucker you in because the rules aren't met yet. Does that make sense? And for all of you guys that are using market flow charts, don't trade market flow chart signals just all over the place. It's not in an area. Look at it. So let me take this one off. Is that a trend trade? Not at all. No. So don't let these signals, quote unquote signals, sucker you. But if you come back here and you start getting right next to that mid band, you have one of those antenna bars. So D-Rock, your best entry is 77.50, right? 76.50 right down here, a tick or two above the mid band. You don't get confirmation until 79.25. Right here is where I hit buy now. I got confirmation, buy now. Debbie, have a great one. But the cool thing is, D-Rock, is my risk is established. I'm going to go behind the bar that gets me in. I'm going to hit buy now, and it's going to cost me $50 for the confirmation. But the cool thing is let's look at 1029. It's not a perfect trade, right? And I think that this is the one you took. Not a perfect trade. You know where it should continue. Notice how you never got the signal? So there's a trade-off, right? What I lovingly refer to as a bitch goddess. It gives with one hand and it takes with the other. Doesn't have to be stranded sellers. That's just adding warm fuzzies to the equation. It can just be an antenna bar. Stranded sellers or buyers makes me feel good. But it's the same process. Large chart says I have a good shot. Small chart has defined my area for entry on a 50-50. But because it's not the greatest look, I'm going to insist on a market flow signal from the area. And if I don't get the signal, I won't take the trade. Awesome. It's my job, D-Rock. All you had to do was post a chart. It's amazing how that works. For you guys that have not posted charts, that's all you got to do. I will talk about everything. So when you're looking for that potential trade, right? You're looking for that, let me see what's going on. Reversal bar down isn't a signal because everything says up. Antenna bar up isn't a signal because it's nowhere near areas inside of favorable large triggers. What are we waiting for? We're just waiting for it to come back to 70.53. And then on that 50-50, can't we line up? Watch this. We can even do it ahead of time. It's not a high probability trade. It's a medium probability trade. This is where I want to see it happen. And look how it lines up with an HVA line. That's pretty cool too. I would, if I'm using market flow for entry, then I'm using market flow for stop placement as well, D-Rock. But I also have to be aware of what's happening, right? If it's a big window of opportunity and everything looks good, then it might make sense to keep it outside of that window still. This one just never made it. But the fact that a 50-50, it is from a good bottom. I love that. And there's my area inside of favorable large triggers. And this is the best thing ever. Another way to use market flow is when you get a high volume area that corresponds with an area inside of favorable large triggers, when you have odds favorable momentum, man, that's a good looking trend trade setup. It's not guaranteed, but it is still going to be 50-50, right? We've already had divergence. So if it does pull back, D-Rock, with a divergence and a potentially lower divergence and a 50-50 on two areas, doesn't it make sense that it's not a bad idea to wait for a little confirmation? And we'll wait and we'll see if it happens. Are you guys cool with that? There's not a lot to talk about. We'll wait and see if it pulls back to that HVA area, if it pulls back to our 50-50 spot. And if it does, I'll pretend like I'm a day trader. Not telling you guys what trades to take. I'm not telling you to enter the market. I am not supplying you trading advice. I'm just talking about how you can use a market flow chart for confirmation. The rules are met first. It doesn't change the fact that divergence is printed on a 50-50. Doesn't change the fact that there's two areas that still haven't broken. Does that make sense? And it may not even come back. I don't know. I'm just kind of preparing myself. Don't even look at that one yet, right? Let it get to the area. You know where the area is. Don't let market flow talk you into stuff. You know where the area is. And if it never gets to 70-50, D-Rock, are you still Central Time Frame? Or how many days back are you? Are you 10 days? You're 5 days? I think I'm 5 days as well. I am 5 days. One tick can change. That's all right. If yours doesn't line up with it, it's okay. Because it's the area inside of favorable large triggers that we're looking for, right? Mine happens to line up with it, which is always nice. So now we're coming back to it. I've got two divergences against a 50-50. I'm looking for that push. Looking for that push. And it's either going to happen or it's not, guys. I don't have any idea. It's not a high probability trend trade. So D-Rock, you also have to ask yourself, do I even want a 50-50 trade with two divergences against it? Am I going to let a market flow confirmation talk me into breaking my rules? Because it doesn't guarantee. Your plan says no. My plan says no too, to be honest with you. But because this is a training class, because it's simulator, can't we follow or break rules based on just getting a lesson in here? I'm still looking for a push down. If that doesn't happen, it doesn't even matter what's going on market flow. I got to get to that area inside of favorable large triggers. So now I'm doing the down dance. I'm waiting patiently. Is everybody with me? You guys that are trying to learn market flow. Market flow doesn't get you into a trade. Market flow is a confirmation tool for when your rules are already met for a trade. And if it never shows up, just not my trade. Awesome. Ron, thank you for being here. You got a 12:30 tea time? You do not. You got your slingshot and pool cue out? All right. It made it to the area, right? Let's see if we get a market flow bar. If I don't get a signal here, then I won't even take a shot. And if I do get a signal here, I still have to manage it aggressively, right? Don't try to anticipate market flow bars. It'll kill you. If you watch these ticks and it starts to go up and you enter, it's almost guaranteed to do a down bar. That's it. No trade. How easy was that? And it didn't fit your rules anyway. Isn't that awesome? You have 76 resistance, David? Well, David, you got the bonus plan then. Clearly, you and John Novak are in cahoots. He's got you with the best fib placement. You may be different days back. You may not have cleaned out. But that's how you use market flow chart. 10 days and clean. Mine may not be clean, to be honest with you. I'm not sure if I'm 10 days or not. I change mine so many times. But there you go, D-Rock. That's it. And now it's kind of, this is where people get in trouble. Well, if I get a market flow signal from here, I'll go long. And they forget that everything says down, right? Oh, absolutely, man. These are fun for me. Guys, when you present stuff that I don't talk about normally, it's a lot of fun for me. Because I know this stuff, but I try to keep this class very simple. But when we get towards the end of class, people start running out of things to ask. So it's awesome. It's amazing when you guys ask these questions. So good stuff. And then, guys, we're back into that termination condition, right? I'm not going long because I'm not willing to fight triggers, but I'm not going short yet. Well, now I got a 50-50. So do we do it again? If I get a pullback, where's my area? It's a 50-50, right? There's my window. If I get a pullback, and now it's just kind of the same thing. Wouldn't you say, D-Rock? Same thing, other direction for those of you guys that are trying to use market flow. You're like, man, this might just be a pivot stop out at support. This might just be a little bit of overrun because of momentum. I don't feel super comfortable about it. So what I'm going to do is I'm going to force market flow to give me an indication that this really is an area that has the potential to hold. So we'll do the same thing here. And we'll see what happens. And then future market flow lessons tell you that when you're already exhausted at an outer band and you've got support, right, and it's only 50-50, we'll see what kind of push it gives. There's no divergence on it. And it's dancing right at the fib, right? It may have been overrun. I don't know. But it never reached my area. And I'm not just going to jump in because that rarely works for me. So I sit and let it dance. Good stuff, guys. That's about it for me today. I don't know if it's going to come get us or not. We're going to find out. So exciting. I'm going to stop the YouTube recording, guys, and I'm going to go ahead and get you guys the link to YouTube.